Our friends over at 8cap are hosting another trading competition for A1 trading fans. If you're interested in testing your skills against other traders in the community, here's how you can join. Head on over to contest.8cap.com, you can find the link down below, and select the A1 Trading Demo Competition. Registration is open now and ends on August 19th. The competition will also start on August 19th and ends on September 2nd. You have the chance to win prizes for first, second, and third place finishes. All trading will be done on demo accounts, so there's no risk involved in the competition. Sign up now for free and good luck.
All right, guys, good morning. Welcome back to another live stream. Today we are taking a look at the producer price index. We've got inflation news coming out here this morning, which will certainly be highly anticipated. People are going to make big decisions today at the big money levels. If you think about this number and why this matters so much, recently, the markets have been very volatile, made evident by, if you take a look at the VIX, the huge spike in the VIX recently. We've talked about this a couple times. The spike in the VIX leaves investors concerned about the economy, right? And it's been a little bit since we've really had growth scares about the economy. That's been a newer theme recently, is people back to nervous about where the economy is at. Is it going to stay strong enough to hold up? So on and so forth. Now, the big spike in the VIX followed the NFP report that came out last Friday, which came out pretty weak, came out very low relative to estimations. And then we proceeded to see a lot of people sort of buy back their yen positions, which is usually a signal of risk off sentiment in the markets. So people got real scared about a potential recession about to knock on the door. And there is a possibility we go into a recession. There's always a possibility, but that possibility increased recently. That being said, there's a couple things here that make this story either, okay, we'll get through this, or they make it really bad. If we get inflation coming down, then it's okay, because inflation coming down allows the Fed to also bring down interest rates, right? And it's all about the Fed. Everybody's, back and forth about what the Fed's going to do. Well, if inflation is coming down, it gives the check mark on this tab to say, okay, we can then reduce the federal funds rate, and ideally that stimulates growth and the economy does okay. But what if you get, let's do G for growth, right? Let's say recently we've seen a little bit of wobbliness in the growth, right? So growth theoretically should help this story, because if growth is just cooling off a little bit, the idea is the jobs market cools off a little bit, which ideally cools off inflation. When people are getting wage increases and everybody's maximum employment and there's like a bidding for work, prices go up for wages. That causes everything else to go up in price as well. So this concept of growth cooling is supposedly good for the inflation story. But if there is some surprise and inflation is not A-okay, let's say inflation actually starts to go back up, suddenly you will see pushback on this story. You can see how if you take in inflation if inflation starts to go up while growth is going down, then the Fed may not be able to cut interest rates nearly as soon or as quickly. This can lead to really tough times. Because if you have rising prices and slowing growth / employment, that leads to very ugly recessions, right? By the way, during that time, you want to be long gold if that is the environment you think we're going to go into. Why? Because inflation causes commodity prices to go up, and growth cooling will cause people to be scared. Scared money goes into gold, right? Stagflation is the very real possibility if you get an environment where inflation starts to reverse course and go up again, that is not good. So today's data point, which is coming out in about 10 minutes, we've got the producer price index, which is very, very important to this story, will tell us which scenario we likely are in. Are we in the first scenario, which is A-OK, where, okay, growth is cooling off, but inflation is coming down as expected? That is okay. Then suddenly we have probably the green light for stocks to, maybe bounce a little bit further. But if you get inflation up plus growth down, you do not want that. That is the worst case scenario for the stock market. It is very ugly because now you're talking about, okay, company earnings are going to hurt. The consumer is going to get hurt. And interest rates can't easily come down because we're fighting inflation at the same time as bad growth. You don't want that. You definitely do not want that. So that being said, I'll tell you guys my game plan here today. If we get this scenario, right? This is my game plan. And it has to do with gold. If we get inflation surprising to the upside today, I think what's going to happen is in that instance, you would probably see, so inflation is not good. Growth, let's just say, is also slowing, right? We know growth is kind of slowing recently. It's not crashing, but it's slowing. But if you have these two stories at the same time, rising prices and bad growth, stagflation, the initial reaction to gold price is probably going to be down because people are going to say, oh, the Fed's not going to cut rates initially. But if stagflation is the environment we're settling into, gold, in my view, in that environment could go much, much, much higher, right? So I'm not saying that's what I think is going to happen. Please understand, I'm not saying, oh, gold is going to scream to 3,000 in the next 2 weeks. I'm not saying that. But what I am saying is that if this is what we get pictures of today, if this is the snapshot that we get, inflation spikes at the same time growth is cooling, that would be the unexpected scenario. But if it happens, I will definitely be looking personally, not telling you what to do, you do your own thing. But I would look for pullbacks to actually get long because that would be a very bullish environment in my view for gold if you get an inflation spike today. Now, why would gold move down first? Well, it's because if inflation moves up, then interest rates, they're going to be projected to not come in as quickly. In the short run, the market may respond, oh, that's bearish for gold because interest rates, coming down are usually good for gold because it's weak for the dollar, strong for gold. You get the point. So in the short run, you might get a spike to the downside if you get high inflation today. I know it's a little counterintuitive at first, but just trust me. That's the idea. It would probably move lower. And then in my view, that would be a possible buy the dip. What if you get really cool inflation data and the market rips through the highs? Then I'm also bullish on gold. What you'll notice here is that there's no scenario today where I'm actually bearish on gold. That being said, I'm watching price action here to see what we get at these levels. If you are somebody watching gold with me too, what I'm looking for is either a strong break, closure, and pullback, or I'm looking for a deeper retracement, at which case I could potentially look to pick up gold at a better price. I think you have elevated risks due to geopolitics. I think you have interest rate cuts coming, the uncertainty surrounding the election, and the side dose of possible stagflation worries. Now, Nick, how can you possibly be bullish on gold and also be bullish on stocks? Well, I'll tell you what, guys, if we get something today, I'm bullish on stocks in the instance that inflation comes in cool. But if you get inflation coming in ugly today, I will probably be moving out of some of my stock positions. As a stock market bull right now, I'm looking at the NASDAQ, I'm looking at the S&P 500, but I'll tell you what, if you give me today, if you say, Nick, we got really ugly inflation numbers coming back up, I would not be surprised if the S&P 500 is taking out the lows in the following weeks. Inflation today is very important because it is a check mark for the bulls or an absolute devastation to the recent rally. Because if you get inflation coming back in, suddenly things are just going to look ugly, because then you've got, okay, growth concerns, but now you've got inflation not going away. Not fun. Same thing for Bitcoin, by the way. If you ever want to know my thoughts on Bitcoin, Bitcoin literally is, in my view, a risk asset. It just moves like the NASDAQ, but more aggressively. It's like a call option on the NASDAQ. As much as, the crypto hodlers would love to think that this thing is not correlated to the rest of the market and that it's some sort of beacon of hope and joy for finance. I'm not trying to be a Debbie Downer, but it's just a call option on the NASDAQ. It is literally just leveraged NASDAQ positioning, in my view. What you'll notice is that the Bitcoin chart goes up when NASDAQ is going up with more velocity, and down when the NASDAQ's going down with more velocity, right? So generally speaking, Bitcoin directionally, I'm because I'm bullish on the NASDAQ, given the current environment, which could change in about 4 minutes, right? Given right now, I'm bullish on risk assets, but I'm very, very curious to see what these inflation figures today and later this week for CPI will come out to. Again, bullish on gold. There's not a lot of scenarios where I change from bullish today. In fact, I don't see anything from the PPI that would get me to be bearish outright on gold. I'm not saying it can't go lower in the short run. I'm saying I like the fundamental backdrop for higher prices in gold. We're near all-time highs. That is a bullish signal. Sometimes people will say, oh, all-time highs, sell the all-time highs. It's too high. But tell that to the S&P 500, which made it new highs for like a year straight, right? New highs signal incredible buying usually, especially in things like gold and indices. It's not, and please understand, it's not a perfect science. Just because something's hitting an all-time high does not mean it's going to just keep rocketing higher. But I generally, when I see something hitting all-time highs, it's innocent until proven guilty, right? Perma bears, people who are super against, they see a chart going high and they say, I got to short this thing. I'm telling you, that's a rough trade to try and do, just because, something that's making all-time highs is probably there for a reason most of the time. Anyways, guys, we've got a lot of stuff coming here in just a few minutes. So I'm going to go ahead and get you guys ready for this. So we're looking again at the producer price index, both the year over year and the month over month. We're going to be taking a look at all these stats. I'll break this down for you. Do me a big favor. If you're enjoying the stream, hit the thumbs up button. And thank you for being here. Appreciate you joining the show. We do these Monday through Friday. They are completely free to join. If you enjoy them, all I ask is that you hit the thumbs up button. We're going to be taking a look at all the different charts at the same time here. We've got S&P 500, NASDAQ, US 30. That's the Dow Jones. Dollar index right here. Euro, the pound. Gold is right here. WTI is right here. So we'll keep an eye on all of these charts so that we can get a broad reaction to this. And we got about 1 minute to go here before we get the PPI number. Let's see what it does here to markets today. Should be very interesting. Again, could be a wild day, could be just a check mark day. We'll see. Check mark as in inflation not being a problem is probably just, okay, markets stay the course. But if inflation is a problem, get ready, right? And again, we could see highly volatile moments. Please be very careful. I know a lot of traders will gamble on these sorts of events thinking that they're slick with it. Trust me, the market is more slick than we think. It always is. Be careful. Don't over leverage. Don't be dumb. We got about 30 seconds to go here. I'll give you the breakdown after. Don't leave after the spike, by the way. A lot of times we see people, come in right before the spike, views go up, and then as soon as the spike happens, everybody's like, peace out. See you next time. But stick around with us. I promise. It is worth sticking around. We've got some good content. Okay, breaking news coming in. All right, and let's see what we got for the PPI number. An initial move higher for stocks, euro, gold. That would suggest that inflation is not an issue. Lower than expected. Ooh-wee, guys. Look at this. We got 2.4%. That is not threatening at all. The producer price index year over year came in at 2.2%. They revised the previous one up a little bit. The current one came in low. I would say overall, this is not a threatening figure, at least from what I can see so far. Yeah, I would give this, give you my first reaction here. They revised some. I'd give this a B plus. That's the report card. Let's go take a look at the market's reaction to a B plus. S&P 500, NASDAQ, Euro up, dollars down on this news. Again, inflation does seem to continue to be cooling. This is good news. Don't get it twisted. This is definitely a positive report for stocks. I imagine you're probably seeing a little bit of bullishness in Bitcoin. Let's see. A little bit for the Bitcoin bulls out there. NASDAQ's up 0.9%. The Russell loves this. Amazing to see that. I am long the Russell. So keep going, baby. Do it. You can do it. The Russell, small to mid cap companies in the United States, definitely more sensitive to interest rates. Their revenues are a little bit more consistent, but they are more sensitive to borrowing costs. They have, they're growing, but they need low interest rates. Let's take a look at interest rates, by the way. I imagine they are probably down here today, and that's what we see. The 2-year yield is down 1%. The 10-year yield, this is signaling that interest rate cuts probably on the way. Inflation doing okay. This is good news. This is what the market needed today. Okay, so if you listen to my commentary the last few days, what I've discussed about the NASDAQ is that this recent move could be completely killed by bad inflation statistics. And if you listen to Chris and I's conversation yesterday on the live stream, this is what we saw, or this is what we mentioned. We mentioned that a good inflation figure is just kind of a check mark. It's not going to make the market like scream higher. That's what I was pointing out yesterday. But a bad inflation number would have completely been awful, right? So the market is shaky here, but likes this number here. At least this is satisfactory to the market, recent rip, right? You've got a market that's really creeped out right now. It's still very scared, evident by the put call ratio, guys. We could take a look at the put call ratio for just a second. Put call ratio is still relatively elevated from where it was. What this is saying is that as of a few days ago with the put call ratio, we saw, the put call ratio pretty high, meaning the demand for puts pretty aggressive. We've seen that come down a little bit, and that's, showing maybe the market is getting a little less wobbly. We also see the VIX down 4.5% today. Makes a lot of sense if you think about it, because again, now you've got inflation cooling still. Doesn't threaten the story so much. Just a quick look at semiconductors. I'm personally long semiconductors, so curious to see how that's doing. 1.3%, we'll take that. I continue to stay long in this position. I'm probably going to trail a stop on these pretty soon. Russell, 0.8%. Let's go. JP225, this is the Nikkei, up 1.55%. Let's take a look at gold. Gold, again, just sitting there right at the all-time highs. I'd love to see this thing have some follow through today. So for gold traders out there, I'm looking for breakouts. I'm looking for retests. I'm looking for continuations. That's kind of the game plan right now for me when I look at gold. I'm getting a bullish reading overall on gold for a number of reasons. The commitment of traders data shows institutional money is still very long gold. They're making money right now. Seasonally, it's a good time to be long gold on a 10-year historical average basis. The trend is still to the upside. PMI numbers, manufacturing PMI numbers were terrible. So that was positive for gold. Services PMI data came in with forecasts. So it's kind of a neutral reading. Inflation cooling, great news for gold. Employment data has been a little bit wobbly, also a positive signal for gold. Interest rates coming down, positive for gold. Retail sales came in a little bit better than expected last time around. We get new rounds of data pretty soon on that, by the way, this week. So we'll see where that takes us. But the score for gold remains intact to the upside. I remain bullish on gold, looking for breakouts and pullbacks, or just a bigger pullback if we see it. So I quite like the chart here. I think it looks like it wants to break. We'll see if it can get through the highs. I mentioned earlier this, a while ago here. I've been bullish on gold for most of the year, but I do think it is very possible that we see 2,500 by end of year. And we'll see if that comes true. I like the setup. I like, you might say, well, Nick, why would you be buying up here? It's at the highs. But again, You have to ask yourself, why is at the highs? We have a lot of reasons that gold is bullish right now. The Federal Reserve and other central banks globally are looking to cut interest rates. That's a positive thing for gold. You also have, concerns about what's going on in the Middle East. People are a little uncertain about that. People are uncertain about the election cycle here in the United States. Who's going to win the presidency? What are they going to do if they do win? The market is trying to figure that out. So there's some uncertainty, and gold thrives in that environment. Thoughts on the Swiss franc? I was looking at a possible short entry if we do get a retest of this level. So I'll keep an eye on the dollar Swiss franc. Yields, again, we'll keep an eye on that to see how those play out here. The Japanese stock market rallying is actually a really positive signal, I think. Dollar yen, also something I'd like to see continue to rally. That would be nice because that would signal that the concerns about the Japanese yen carry trade unwind perhaps are behind us. It seems like they're behind us. It seems like we worked off a lot of that margin call stuff last week, but I want to see some follow through, right? Some follow through is really important here. Can we take out the highs? Can we keep this recovery move moving against the Japanese yen? Basically, can we see the Japanese yen cool off a little bit? I think the market would feel a lot better if we see the dollar against the Japanese yen get up to like 152. So we'll see. I'm watching that one really close. The Japanese yen has been top of mind for me for the last few weeks. I've got an opinion on CHF JPY pairs in 10 minutes. Awesome, Ivan. I'd love to hear your thoughts on it. Guys, so just a heads up also, in case you are just newer to the stream, I just wanted to mention something that we're doing right now. We are currently doing a huge discount on our Gold VIP membership. Inside of our group, you can get access to all of our trading journals, all of our entries and exits. So every trade that I take, whether it be the Russell, the S&P 500, the NASDAQ, gold, silver, oil, we trade FX. I shorted dollar Swiss a lot in the last few months. All my stock trades, as well as Frank's, and you can see some of Ivan's as well. If this is something that you're interested in, I just want to let you know that we are currently doing a really big discount on this. You can currently get 35% off of our membership group. And let me just kind of give you a quick pitch on this. I know you've probably heard people say like, oh, join my Discord, pay for my signals. But what I want to offer you when you think about this is that, the trades that I share on my channel, I trade on live brokerages. I pull it up regularly in my show, in my videos, in my live streams. If you've been thinking about joining this, what I want to illustrate the difference between our service and maybe the ones that you've seen all over the place that might be more on the sketchy side is that you never know if they're actually trading live brokerage accounts. But you can go pull it up on our website or on my YouTube channel. If you go to the homepage, I pull up the live brokerage, the US regulated brokerage that I place all my trades on that I share inside of the group. So I have skin in the game. When you see trades being taken, it is on real money. It is on a large live US regulated brokerage. The difference is if you want to come see real trading in action, join our Discord because there's no nonsense, no Lambos, no hype to try and sell you, just straight up real trading results. If that sounds more up your alley, if you are, tired of the nonsense and fake trading rooms, I'm telling you, I can't give you too much information because it's still in the works, but we've got some incredible upgrades coming. We got just really cool stuff coming to the Discord in the next few months. And it is a great time to join. We got, Q4 is a really exciting time for markets. Trading is an indoor sport. So as things start to cool off in the weather, trading usually gets a little bit more volatile once people get back to the desk from their holidays. So if you're not already in our group, here's a couple things. You get access to all the trades that we're taking on real accounts. You also get access to our trading journals where we're sharing thoughts and opinions about what the market is telling us. You get all of that sent directly to you. And we also have coaching webinars and strategy guides. So you can join our coaching webinars with Ivan, who does those a couple times per week. He's going through charts and ideas and answering questions. We also have our strategies in depth written out for you. So if any of this sounds like it is a fit for you, again, it is currently 35% off, and you can get access to it by clicking the link in the chat right now. We're going to drop a link here for you, and you can send a direct message to our team members to get more information about the discount, as well as if you have any questions, if you'd like to see the track record, if you'd like to see whatever you want to see, please ask us questions, make sure it's the right fit for you, and use this link that's just been dropped to speak to a member of my staff about it. We'd love to get you a membership. I'm telling you, it is worth the money. I'm very, very confident that if you join and you take it seriously, you will get well more than your money's worth, especially when it's discounted so much. So again, if we could just drop that link one more time, Chandler, just for the chat to reference it, that'd be awesome. So again, where are we at today? Well, inflation was non-threatening. I think that solidly deserves a check mark at this level. I would not be surprised if the next, few days are still volatile because you still have some really key economic data. But this takes a little bit out of the uncertainty. Sorry, about the CPI report, right? The CPI report is also really big, but CPI is going to be big this week, guys. But a lot of the same statistics that make up the consumer price index are baked into the producer price index. So today's PPI coming in satisfactory is a nice note to go into Wednesday's consumer price index on. We also have, I believe it is Thursday, we have the retail sales figures out of the United States, which is very, very important also to the story because we want to see the consumer doing okay. Inflation cooling is going to help the consumer, right? If inflation is slowing, if prices are not going up nearly as quickly as they were, say, a year ago, that is good news for the consumer. That's what we want to see. We want to see the consumer getting in a better place, not in a worse place. Inflation going up quickly or coming out hot over and over, not fun for the consumer because they're going to the gas station and prices are higher. They're going to the grocery store and prices are higher. And I'm not saying that's not happening, but I'm saying at least it is slowing drastically from what we were all shell-shocked by a year ago. A year ago, everybody was like going to the store and it was like they'd have to shock you back to life every time you left that place, man. It was so the prices were just like going up. It was like they were tripling every few weeks. It was crazy. I don't know if anybody else felt the same way, but I just have my wife and I, we don't have kids. It's just us two. And our bill went it doubled. It was insane, going to the stores. So anyways, yep. Current positions for me. I'm long the S&P 500. I'm long the Russell 2000 index, IWM, and I'm long SMH. And I have a couple individual stocks. I'm watching gold for a possible entry. And I have some currency pairs as well that are on my watch list, like dollar Swiss and euro dollar. Euro dollar, I'm looking for a break and retest. Dollar Swiss, maybe a retest of this area for a possible hedged short position, but we'll see. Anyways, guys, we're going to take a quick break, and then we've got Ivan joining the call. He's going to tell us a little bit of his thoughts on this inflation statistic and also about the Japanese yen, which, again, I think is central to this whole situation that we saw play out last week with the fears about the carry trade unwind. So we'll see some of that or discuss some of that in just a moment here. Stick around. We'll be right back after this quick break with Ivan. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, and we're back with Ivan. Hey, Ivan, how's it going, man?
I'm doing well.
Good to have you back on the show. And again, for a pretty big one today, we had the PPI numbers. Overall, not too threatening, not too terrifying. I personally was pretty nervous that we would see or could see higher than expected inflation statistics, which would have been a different looking market today. You wanted to talk about the Swiss franc, you want to talk about the Japanese yen, and I imagine also the dollar. What are your thoughts on those things?
I just wanted to mention to you guys, like, oh, what about dollar Swiss? What about everything? Like, sorry, is that for all the Swiss pairs did the same thing as yen pairs and the dollar pairs, kind of, was that we had this meltdown. Okay, we are going to have many meltdowns going forward. So my thoughts is when you have this meltdown, you have this. I don't know what the Swiss did. Was it 700 pips on Australian dollar against the Swissy? When you have these meltdowns, there is going to be a rebound, and you have to be prepared for those, because those are one of those things that I really love. So yeah, I did a couple of trades on the yen pairs, as you can see, when it, in my opinion, turns bullish, and now it's going to be sideways. But when you have these volatility events, whatever it's called different things, different days, but they all have a rebound at the end of it.
Yeah,
Usually
and
first
the bounce can be so violent, right? Like everybody was so convinced that the Japanese yen was going to go to 1 million, and the stock market was going to go to zero. And to your point, look at the bounce backs in things like the Nasdaq. You take a look at the Japanese yen. My goodness, this move from the low to where we currently are is 550 pips. It doesn't even look like that much. Just to show how violent that move actually is.
So as requested, we are on dollar Swissy. We are 222 pips up from the bottom, and then you need to decide. Now you have it. This is testing ground, right? So at what point, or is it still not? At what point is it bullish for you? And then you have to go back into all these other times where we have done this type of situation, because what is it called? Preparedness meets opportunity. Because nothing really happened to Swissy. Swissy wasn't a part of this game, generally speaking. Well, in the end, it was proven by the COT report that there was a lot of movements away from the carry trade with the Swissy, but the Swiss National Bank, the Swiss economy didn't do anything. So we need to keep this in our heads.
Yeah. Yeah, and that's the thing is when you take a look at both the Swiss franc and the Japanese yen, saw a lot of buying of their currencies because the world kind of entered this pandemonium, terrified of global recession. But that's not usually how it works, Ivan, right? Like a recession doesn't jump on you. It usually materializes over time, right? So like this idea that we have one bad jobs number and the world's going to go right into a recession the following week is not very realistic. I mean, if you take a look at, for example, the signs in 2008 of a recession, many people, obviously hindsight is 2020, but many people were pointing out that the recession really only got seriously announced once we had really seen the bulk of the stock market sell off. So if you're someone who thinks, oh, we're going into a massive recession, well, you could kind of be like on a roadmap, you are here, right? You are here, right? So to say like, oh, we are in a great recession right now, like it takes time. Even if you're right about a recession call is a gradual process, not a snap call based on one jobs data point. I do think that it's fair from the NFP report. If you're looking at something like dollar yen or euro yen, the demand for yen coming back is kind of fair in a perspective of, well, there's a higher chance or probability of a possible recession. So I get that. But I think that in the short run, it became very overdone. And where do you think this has room to go to? Ivan, do you think we're sitting right here on dollar yen at 147? I think if we get a closure somewhere in these wicks, that it's very possible that we see a little bit more upside and that maybe this dollar yen normalizes a little bit further.
Yeah, so about where this one is going to go, it's of course highly dependent on what Bank of Japan does and wants to do in the future. If they want to do a rate hike again anytime soon, which is very unlikely, but hey, that's the name of the game.
Yep.
And as well, when we're saying trading Forex is risky, this is the risky part. Where things just drop out of your hands and you're like wondering what is going on with my account. I'm losing. That's where you have your stop loss, right? So it did, Kyle did drop 2,000 pips, and in my simple opinion, and when I've been trading this kind of scenarios a couple of times now, that we are gonna go higher eventually. It's gonna reduce what generally tends to happen is that the volatility reduces. It starts going a bit of range bound, and then it kind of like it trickles a bit higher. Because what is technically or more flow wise currently happening is that a lot of buyers on dollar yen left the building,
Mm,
but they also got a ridiculous discount.
yeah.
Um, we're seeing that dollar is now maybe going to have a rate cut, and we may have a rate hike in Japan, but that's not current. We
Yeah.
still have quite high interest rate in America. We still get money from doing the carry trade at a serious discount.
Yes, there's still some, actually, Ivan, you breaking that down made me think of something. So I want to discuss dollar yen here. The chart that you just drew in, that little squiggle there, I actually think is probably the most likely scenario for price action going forward on dollar yen because of the actual situation that took place here. If you think about what happened for dollar yen to make that kind of move, there was a big deleveraging event. So many hedge funds, they borrowed the Japanese yen to go buy bonds, to go buy stocks, to go buy higher yielding assets. It is one of the oldest trades in the FX book, right? That's what all the big players do. They go sell the yen or borrow currencies so that they can go and then buy higher yielding things and make a return for their bank, for their clients, whatever. Now, the thing here is, as you just mentioned, some of those investors, those hedge funds, those banks still have unwinding to do, deleveraging to do. If the risk of a recession is higher, many of them are going to have policies that they're going to want to reduce risk. So that would cause some downward pressure. But if that happens at a steady rate, not a crisis rate like we saw, then that can occur at the same time that, as you just mentioned, a lot of savvy investors, a lot of traders can see that there is value here, that there's underpricing of this exchange rate potentially. And what that could lead to is, offsetting of some of the carry trade for some, which will put down pressure, but a lot of buying of the opportunity. So that could lead to some selling, slightly more buying, and maybe a slight trickle up, as you're saying. So I actually think I could be, wrong, and something could change in the picture. I don't think the Japanese, central bank is going to surprise hike rates. They've said such in their, recent outing during all the chaos last week. They felt the need to step in and stop the bleeding on the Japanese stock market, on the yen. So I think that the most likely scenario, not a certainty, but a likely scenario, is that we do see a trickle higher on the on the dollar against the Japanese yen.
To make it a bit more simple, if you have, let's call it $1 billion in management, and it costs you, well, okay, if you want to get out of your position, you're now 2,000 or 1,500 pips less profit than you once had a couple of weeks ago. What would you do? Is that why we call? That's why we had what people would probably would call a stop hunt. They would get up to the top so that they can exit again. I don't know if this is going to happen this time. That's not the deal we're going to do this time around. But there is a lot of sense to it, because right now they're not getting their value if they are yet again going to dump their carry trade. Because when they dump their carry trade, and as you can see, the wick was quite something in the first place. That was about 400 pips in one go. That's a lot of slippage for those, and you can't go to your clients and say, well, we lost $200 million. Why?
Right.
Well, we forgot to exit at the right time.
Yeah, we had to deleverage. Sorry.
Sorry.
Yeah, no, it's an interesting concept, and I think it's a unique one because, what saved the day, Ivan, is the consecutive data that came out following the big sell-off, services PMI, unemployment claims. A lot of people were like, why did those things get so much hype? But it's just because those things help to stop the onslaught selling So, maybe there should have never been that kind of, last move. But as soon as that data kind of normalized it a little bit, dollar yen saw a little bit of a bounce back. We will see where this one wants to go. Another one is you mentioned dollar Swiss. I mentioned, Ivan, that I think that there may be a possibility where, as you talked about, like maybe they want to get better pricing, so they're letting it float up. I kind of like the idea of possibly getting another dollar Swiss short position going, not as a huge bet, but as kind of a hedge, because I am super risk on right now. I'm long the NASDAQ, I'm long the Russell, I'm long semiconductors through SMH. So I've got all the risk on assets on right now. So I kind of was interested in maybe getting a currency market hedge. So we'll see. I have another question for you. Dollar index, is this due to go lower, or have we found a short-term bottom on the dollar?
You love your questions, right? Because you don't need to answer them yourself, right?
Yes, I just don't want to answer it. I just want you to answer it.
Actually, okay. What am I saying? I'm gonna chicken out, and I'm gonna say we are kind of in the middle. We are at support. We are kind of in the middle. We are not in an extreme enough to say, well, this should be the bottom, and therefore we should go in a certain direction. But I just want to make this chart very simple for everyone, right? That's kind of how I would do support and resistance on this one. I say, okay, we have hit it. Can it break? Absolutely. It's just what has happened so far. So then you have to look at drivers. What drivers do we have today? We have PPI that was a bit lower than expected, and the previous one was revised a bit higher, so the drop was a bit higher. Okay, and then in that fashion, if CPI comes out is tomorrow, then that should continue lower based upon the current drivers, and that's how I determine where things should go forward, not necessarily technically what candlesticks it's giving me.
Yeah. No, that makes sense. I think from a perspective of what you and I have done for the last number of years, we pay most attention to the fundamentals first, and then we try and lay the technicals over it. And I think that, a lot of traders, they only focus on the technicals, or they do a dash of fundamentals after they get done with the technicals. But for me, the fundamentals come first. Right now, that, as you just mentioned the word drivers, I like that word for this. The drivers for the dollar are lower. We've seen growth slowing in the US. There's no question in that, because again, we saw the jobs data, which spooked the whole market. I'm not saying it's crashing, but it's definitely slowing data out of the US. And at the same time, interest rates are expected to come pretty soon, because in September, because we also have inflation really cooling today. Today's inflation figure, I think, was very much, if you were a bull on the dollar today, you're looking for just a winner chicken dinner, higher than expected inflation stat today and tomorrow. But we didn't quite get that today. We'll see what happens tomorrow. It could, reverse course tomorrow. But what that would tell me is most likely the path of least resistance is for us to, test this 102.5. And if you get cool retail sales or CPI data, I would not be surprised if we take out the lows and continue the selling on the dollar, leading to, other currencies to take a bigger move to the upside. I'm also watching the euro. What do you think about the euro, Ivan? I like it on the long side if you get a big breakout on some soft data points out of the US this week.
I don't know if I'm confused, but so how do I tell myself how to think about it? So in general course it's kind of like opposite of what dollar would do. So if dollar is weakening, we are seeing quite a lot of risk on. Europe isn't in my mind doing awfully horrible. And then there is GDP tomorrow for that matter. But I would be like a standard bull on a euro, not for any price and not at this price, but yeah, I think that generally we would see higher price on the euro based upon what the dollar is doing, and generally it's not horrible in Europe. We are seeing inflation stabilizing around 2.8, 2.9 or so. So it's all right. It's probably due to go a bit higher because of risk on sentiment, because we haven't seen the retaliation from Iran on Israel.
Yeah, and Ivan, let's just throw that around for a second too. If you get something that comes out more scary on that front,
Mhm.
what's your playbook for that? I know you and I have talked about that before. You know, oil's moving up already. It's kind of hard to be in some of those moves before they potentially
Yeah.
happen. But
Yeah.
what's your playbook if you get geopolitical stuff kind of ramp up suddenly?
I hate to say it, but I bought not all the end pairs. I bought the end pairs that I posted in the group. So I will be seriously hurt if that happens. So don't jinx it. Don't jinx it. But euro, pound, New Zealand, Australian will fall against the dollar and the yen and the Swiss. It will be a reverse of what is currently happening. So yeah, oil will probably go higher, but like the winner winning chicken dinner is probably a Aussie dollar or a Aussie dollar yen kind of short is probably the best one. But you don't know until it happens, then you already way
Yeah,
too late, and it already happened. Sorry.
that is probably what, and you know, the playbook on that, which is kind of weird, is in my view would be if you get big moves lower on the dollar yen or you get stock market sell off in that regard, it actually might be a buying opportunity if the rest of the economic data looks okay. It's kind of weird how that works. Paul, thank you very much for the 4.99, man. I like to use technicals. Normally the chart tells me what to do next, but there are times fundamental comes to play. I would agree, Paul, especially in a week like this where you have just, you know, data is going to drive the markets. What you'll notice is that on no economic days, economic data days, the market's not moving. And then once the actual data comes in and creates a real driver or a bias, suddenly the charts are moving one direction real hard. So, you know, today's PPI statistic is a good example of that. Take a look at the NASDAQ, which is just, you know, here's the 5-minute chart. There is movement here. The gold market is moving higher. Or continuing its move higher. You know, it's been flying overall. So definitely true. Thank you again for the 4.99 donation. I appreciate it very much. Ivan, what else are you watching? Any other charts or pairs you're watching?
Across from the Australian dollar, Australian dollar yen, the euro yen, the New Zealand yen. No.
So you're really just focusing on the yen pairs right now, and you have a pretty a bullish bias on the ones that you've got.
Yeah.
Which one's your favorite? Which of the currencies against the yen is your favorite?
The one that gives me the most pips for the least amount of risk. So at this point, it's probably
That's a great
euro
answer.
yen.
Okay, euro yen. Yeah, I typically like I like the euro on the long side right now as well, unless something changes. But very, very interesting. Okay, I'm going to ask you another one. Gold. Okay. I was kind of thinking today with gold that the inflation statistic may not have mattered, and gold would stay bullish in either case. This is my long story short reasoning for that was inflation high is meaning, oh, they might not cut rates as quickly, but high inflation, commodity prices rise, stagflation potentially with growth concerns, that would have been potentially still bullish. And then we know why, you know, low inflation is still okay for gold because they're going to cut interest rates. Do you agree with that? Or do you think gold is, you know, bumping heads with the highs and it's going to come lower? What do you think?
I want to arrest you today. Look at the calendar for tomorrow. What's on the calendar tomorrow? And what have we learned from the markets? Not ourselves, but what has the market taught us about tomorrow? When we have two inflation data 2 days in a row, the first day is muted, and then the market comes in tomorrow. Because on my calendar, at least, it is CPI. And that's where it's going to go. So today it seems a bit muted. So, but yeah, and in general, I agree with you. I'm just having fun with you. But yeah, if this one comes in lower tomorrow at 2.8 or lower, gold, is probably going to take off. Dollar is going to fall, as we have talked about, and that's going to ignite the rate cut situation. But if this one comes in like 3.1 or higher tomorrow, I'll be confused.
Yeah. I think it's possible that, based on today's PPI number coming in, cool, we could see a 3% forecast come in line, or maybe even we drop the 3 handle, we go into the 2s, and maybe that is a signal of a sigh of relief for the markets. Again, a lot of people really concerned that we've seen unemployment rate rising, and you couple that with rising inflation, that would be horrible. But today's data point already gave us at least one check mark of this week. We got to get through this week. This week has so many different variables. The big ones that I see, Ivan, that I'm still watching. So we've got PPI out of the way. The other things that I'm watching for this week, so we can take that one out. We have CPI, we have retail sales, and we have another wild card, which is WMT, Walmart earnings after the bell on Thursday. Why? Because retail sales and Walmart both give us insight on the consumer, right? So Walmart is obviously, everyone knows Walmart, massive shopping center, tons of retail trading volume or purchasing and buying and selling goes through, Walmart. So if the demand from the consumer is there and is okay, that's going to be a good signal for the consumer. And if it's weak, if they miss earnings or they miss guidance, or they guide that their earnings are going to be poor for the rest of the year, they have a lot of that data at their fingertips as a company in the goods and services world. So very interesting stuff to see. Retail sales data this week, the Walmart earnings, both of those will be very interesting. Probably the biggest market mover for the rest of the week will be CPI, but retail sales will also be very, very important. So we've gotten through one of them, Ivan, but we got more to come.
Oh, it's going to be funny. It's going to be interesting. It's going to be great. It's going to be a fantastic to be trader going in these days.
Yeah, and then you've got late August, I believe we have the Jackson Hole Symposium with the Fed, and we have NVIDIA earnings, which are always a wild card.
Well, how much can they beat the beatings? Like, how much can they beat the projections?
That's the question, man.
How high can the high go?
Every time they've had their earnings, they come out and or not every time, but most times they come out and they beat their earnings and they guide even more than people thought they would. So the question this time around, August 28th, is, are they going to pull off another stunt where the market, rips on NVIDIA earnings again? Or, are they going to come short, which has the potential by itself to erase a lot of bullishness in the AI trade? So that event, as well as, I think NVIDIA earnings, if you're a stock index trader, Jackson Hole Symposium with the Fed probably carries the same weight as NVIDIA earnings. They're both very, very important to what happens next in the indices. So, yep. Ivan, I think that crosses out pretty much everything that I had questions for you on. You answered them. You got an A+ today for your test score. Before you leave us, I just want to mention, everybody listening, if you guys enjoyed Ivan's commentary, we're going to drop the link to his YouTube channel. You can also find him if you're in our Discord group. He does coaching webinars within our group, and he also does one-on-one coaching. So if you're a member with us, please take a second, send a direct message to Ivan within Discord if you're looking for help. If you're looking for more one-on-one attention in your trading, he does offer that. That's something he does, and he specializes in it. And we've heard raving reviews from everybody who's done it. So with that said, Ivan, thank you very much for coming on the show here today, and we will see you on the next one.
Thank you very much for having me.
See you, Ivan. All right, guys, we're going to keep the show rolling here. Before we go to our next segment here, I just want to remind you that, speaking of the Discord group, it is currently on super sale. We're doing a 35% off discount right now for our membership group. So if you're looking to join in on that, it is currently 35% off. So within the group, a couple things that you get access to. You get access to our trading journals, but also you get access to our trading signals. So when I enter a trade, when Frank joins a trade, when Ivan takes a trade, you get to see those trades with in-depth breakdowns. We have people from all over the world. We trade around the clock because we have people in different time zones. And we trade a very wide list of things: indices, commodities, FX, stocks, ETFs, options. We really trade it all. So between the group, we have quite the list there. We also do a coaching webinar multiple times a week, and we have a strategy guides section where you can read through our strategies and how we trade. So again, that is currently on super discount, 35% off. If you send us a direct message during this live stream, the link has just been dropped in the chat. Click here to speak directly with a member of our team. They can answer any questions you have about the service that we offer. They can share track record details. They can answer any questions about this things that we trade. So if you have any specific questions, please feel free to take a second and message our team. Or you can also just ask for the discount code and discount membership information using that link. So don't miss it. That is a short run sale. So don't miss out on that if you've been thinking about joining. We did that because it's a super busy week this week. So got a lot of fun stuff coming down the pipeline. Should be very busy. Okay, guys, update on the markets. We've got S&P 500 up 0.6%. NASDAQ's up just shy of 1 or just above 1%. The Dow Jones up a modest 0.22%. And the Russell, good old Russell. I'm cheering for this, man. I want the small caps and mid cap companies to do well, because usually you don't see small and mid cap companies really killing it in a late cycle, right? And that's been the case for the last few years. Big tech and value companies have killed it in the last few years, or tech value companies, the mega tech companies have really carried the stock market higher. But I want to see the small and mid cap companies, the average American small business, the average mid cap company in the U.S. I would love to see some real solid performance off of the idea that rate cuts are coming, that the economy can do okay. Obviously, the market doesn't care what I want to see. That's also what I think is possible to happen, especially with today's non-threatening, I would call it, inflation statistic. Guys, in just a second, we're going to have our next guest take over the show. It is Forex James. And before we do our little segue to set that up, I'm just going to mention that if you enjoy this next guest's commentary, and you'd like to get more from him, they do offer some services as well. So if you'd like some information about that, we'll be dropping the link to Forex James and Elite Traders services at elitetraders.io. So we'll drop the link to that in the chat. We'll take just a quick break to thank our sponsors, and then Forex James taking over the stream. Stick around. We'll be right back. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey guys, how's everyone doing? Happy Tuesday. Hope you all had a great weekend. So today we've seen a really nice rally on gold, actually, after the US news. So nothing too crazy, but we are approaching all-time highs again quite rapidly, actually. So not too far off of that. Let's see. We've got, only 0.5% to go, and then we'll be back at all-time highs on gold. I'm looking at the 2,500 level on gold as a target for the short term, or the near term. So we'll see if we get that. Not really looking to get into gold. It's a bit too expensive at the moment. So if we look at gold in terms of the 200 moving average, I like to see a more stable price, if that makes sense. So I like to see the markets quite close to the 200 moving average, and that's an indication for me to get into the market, because the price is cheap, if you will. However, at the moment, we can see we're almost 10% above the 200 daily moving average. So if we look at previously, when we were around 10%, we also saw this pullback here. Now, I'm not saying we'll get this pullback. I'm just speaking on a technical basis, that it's just a little red flag for me that I'm not too comfortable getting in right now. Although my bias is still to the upside on gold. It's just a little bit too up there for me right now. US tech, yeah, we can have a look at US tech. So I'm actually long on Nasdaq at the moment. I don't know if I've got it marked up here. No, I don't. So I'm long from around here. So I got quite a late entry. My stops around here. So this is the position I'm in roughly. I'm still happy to be in the indices market at the moment. To the upside, I think that the sell-off we saw on the indices stock market, and then obviously the sell-off we saw with the yen pairs, so dollar yen, euro yen, etc. I think they're coming to an end at the moment. Anyway, they're slowing down for sure. So I'm happy to take a stab here. I'm not necessarily ready to say that we're in a bear market. I mean, you can see this is the daily time frame. It's quite normal to have these types of pullbacks. So, we had a pullback here to the 200 moving average. And it's a very similar thing as what I was saying with gold. So we're very deviated from 200. We've come down. We've sort of come down to a cheaper price, and that's allowed me to get in and hopefully ride back up to the previous high around 20,600. So that's my plan on Nasdaq, but again, it's more of a stab. We'll see. Quite a lot rides on the US data we've got coming out. I think it's tomorrow. Actually, we've got CPI. We've also got Nvidia earnings as well. It'll be a huge player for Nasdaq. So we'll see about that. It could get quite messy this month. We also have the Jackson Hole towards the end of the month. I think that's the 22nd to 24th. So yeah, this month might be a little bit rocky for some people. Don't hold too long. 2,500 is not a confirmed TP. Start taking profits as you approach 2,500. Sick of punk. Yeah, I mean 2,500 is a loose level I'm looking at, just because it's a nice round number, not necessarily a hard target I've got. It's just something I'm looking at. Silver. I think I'm short silver, actually. I can't remember. It's on my other accounts. I think we might have a signal out for a short silver in the Discord. I think it's in some drawdown, actually. I think we entered around here with a stop somewhere around there. I think this is roughly the position we're in, something along these lines. Can't check right now. But yeah, we're still looking to short silver because we're looking at just a shorter term trend. So let's pull up the fib here. So you can see we've got a really nice reaction off our fib level here at the sort of golden zone, as I like to call it. Also quite a nice retest of this previous level around here. So you can see we rejected, bounced, broken through, and now this is potentially the retest that we have before the continuation to the downside. But again, this is more of a technical approach to this one rather than solely based off economics or fundamentals. AUD, USD, and New Zealand dollar. Which trade are you on right now? Bernard, I'm in a lot of trades. What is gold doing? Gold is moving as it normally does. If CPI is good, what will happen to gold? Well, that depends. We'll have to see. CPI is, more leading towards rate cuts, then we'll probably see gold head further to the upside and probably hit the 2,500 level. But if not, then we will see more than likely quite a lot of dollar strength. And that's because it will start dampening the expectation of aggressive rate cuts. So that's something to keep in mind. Also, something I've got here, and I'm happy to share this with you guys if the A1 team don't mind me sharing a link. I'm not sure how they feel about that, but this is essentially, I do this every week. I used to do it on Excel, but I've just moved to Notion, so I can just share a link so you guys can read this. But it's a breakdown of all the bank reports and all the currencies, or all the G10 currencies. So yeah, this is kind of the roadmap I'm using at the moment, which I think is quite nice. So we can see we've got 51.5% and a 48. So essentially a 100% expectation of rate cuts coming in September. So if that starts to dampen, that's essentially going to be a bit of a rocky climate that we'll be in. Any prop firm? No, I don't really mess with prop firms. I think they're a bit of a shiny object syndrome. So let's have a look at the Australian dollar. Oh, I'm actually in the Australian dollar. Completely forgot about this. So this one is actually against my bias. So I am actually expecting a higher Australian dollar. However, the technicals on this one were just too aligned for me to avoid. So this is a very low risk position, and it's purely just off the technicals here. So if we draw obviously fib from high to low, we've also got the 200 daily moving average along with the 21 daily moving average being rejected for the past 2 days, along with the level of structure through here that meets the fib golden zone. So technically it's almost perfect. It matches the way I trade very, very well. But as I said, it doesn't align very well with my economic outlook. So we just going to refer back to this. Now, I do this quite often, so I hope I don't bore you guys too much. But if we look at the, actually, do I have it here? Yeah, Australian dollar long. So we can see favorable valuation, rate differential, strong labor market, and lower mortgage risks in Australia compared to the US make the Australian dollar attractive. Expected global growth upturn in 2025 further supports the bullish outlook for the Australian dollar against the US dollar. Now, pair that with the likelihood of rate cuts with the dollar, it sounds like quite a promising trade to the upside. So essentially, if we do get a bullish run and let's say I get stopped out, I'd be more than happy to then switch up and go long off a retest of this previous support, now resistance, and start approaching like this. But for now, happy to stay in the short. As I said, it's more of a technical, low risk play for now until we see either a drop to the downside or a break and retest of this level. New Zealand interest rates coming this week. New Zealand dollar, let's take a look. Yeah, so very similar situation. Actually, we did see a huge sell-off on the New Zealand dollar here. And this was kind of the risk-off period that we saw in the markets. And now we've seen essentially a full recovery, actually, which is nice. So it wouldn't surprise me if we do see slightly higher prices just to potentially come back up to this previous high. And that would sort of normalize the price, if you will. As for the, what was it, the interest rates, let's see. I don't really trade the New Zealand dollar. I normally stick to pound, euro, US dollar, and indices and commodities. So the interest rates are expected to just be 5.5 as previous. So if they come out as expected, then we won't really see much happen. It's more than likely priced in at 5.5 anyway. Gold's dropping. Yeah, we can take a look at gold. I think I actually just spoke about gold, but essentially what I'm looking at on gold, apart from the 2500 level, is the sort of technical pattern that we're seeing. So let me find price. Is that price range? Price range. So we can see we did a very similar thing. So we've created a triple top here, but this was a double top almost. So after the first one, we saw a drop to the downside. The second one, we saw a drop to the downside. And we've seen this pattern repeat. So every time that we create a new high or an equal high on gold, and this is obviously the H4 time frame, we've seen this drop to the downside. So if you were looking to play this on a technical aspects alone, it wouldn't be out of the question to say we could potentially see gold drop to the downside. The issue is, in my book, that goes against what's driving gold at the moment. We're heading into elections. We've got tensions in the Middle East. We've got Russia and Ukraine starting to spark up again, with Ukraine starting to, well, last time I heard, they were stepping foot into Russia, which is a bit of a dangerous situation to be in. So yeah, the global situations does support gold to the upside. But yeah, technically speaking, I wouldn't mind seeing lower prices on gold for now, just in the short term. Structures show story. They do show the story, but they show the previous story. They don't show the current story. How do you mind sharing your average yearly percentage? Yeah, of course. My average percentage isn't anything crazy. I'm not going to sit here and say it's hundreds of percent, but this is my record since 2017. And this is obviously my company record because I trade on behalf of elite traders. And so do my traders. So all our gains are aggregated. So you can see them here. These are our yearly gains. Average percent gain is 3.74%. So nothing wild whatsoever. Hold on, just give me 1 sec. I'm just asking if I can share this link with you guys. Again, I don't want to share stuff that's not allowed. Anyway, so for my watch list, there's not too much. Looking at euro dollar still now, I'm starting to become a little bit more bullish on the euro dollar, just because we do have the rate cuts coming. We've got quite good data for the eurozone at the moment as well. The only thing is I don't want to be going long into this level of resistance here. So obviously this is a weekly resistance. We've also got the weekly 200 moving average that's been rejected quite consistently here. So it's just a little bit of one of those things where I am bullish, or starting to turn bullish, but just can't get myself into a position here. It's way too risky on a technical aspect. We also have a really high RSI here as well, I've just noticed. Nothing too alarming. It's at 71. My red flag level is sort of 75 to 80. So you can see I've got them set here. So when it starts turning red, that's my indication to either get out of long positions or look to go short. So yeah, not looking to go long right now. Maybe in the future when we break this level and potentially break and hold above the 200 weekly moving average. Vinoid Nick is, I don't know, probably doing something else. So the way these streams work is Nick's here for, I think, 1 to 2 hours, maybe a bit more at the start of the stream, and I think he comes back after. And then we have segments with people like me and other traders where we come in and do our little bits with you guys. There we go. So if you guys want to see, if you want access to this Notion template, there's no upsells. You don't have to pay. It's 100% free. Normally I don't give this out. This is, it's limited to the Discord people. But because you guys are always so welcoming and such a great chat, happy to give this out this time. I must disagree with you. You can anticipate the coming move with tight stop and risk management. You should look into waves and market behaviors. See, I just don't, I'm not in the same outlook as you. So let's have a look at the NOK SEK, for example. So technically speaking, we're in a downtrend. So, it would make sense to go in shorts here, but the economics are essentially right against this. So if we look, we benefit from relative stance of the bank, which is expected to hold rates with a hawkish tilt compared to the risk bank. Central bank flows, lighter positioning, and geopolitical factors favor the NOK over the SEK. Additionally, NOK SEK is currently undervalued, providing an attractive entry point. So it's things like this. You wouldn't be able to understand that from just looking at technicals. So although technicals can work when scalping and day trading, if you're looking to position trade or swing trade, in my view, in my just personal opinion, I think it's essential to have at least some sort of economic understanding or forecast. 3.74 is extremely low. Are you sure you can get more with fixed income? Well, we outperform the indexes. We outperform institutions. So I'm more than happy with that. If you can make over 1% a month, on average, you're in a top percentile trader. Bearing in mind, 95% of people lose money in the markets. So I'm more than happy with an average of 3% over the past, 6 years. Can you share trade journal, portfolio performance? Yeah, if you contact me on Twitter, I'll post it there. I don't want to spam this chat with all my links and things. So Euro CAD, I'm still in this position, scaled in this morning, actually, essentially almost the perfectly wrong time, scaled in right here, as we saw this sort of small reversal to the upside, but that's fine. I'm not too worried about that because I've got the initial position still open up here. So still sitting in Euro CAD. I've been in this trade for how long? Almost 10 days. So nothing too crazy. No, crazy holding times yet. Yeah, H Balot 88. I'm sorry if I get you. I'm really bad with names, so I'm sorry if I butchered that. If what you do works, that's completely fine. I can't tell you what does and doesn't work for you. I have no right to do that. So if technicals are working for you, that's amazing. That's really good. I'm happy for you. It's just for me, technicals and swing trading don't really work. I mean, they can work. Don't get me wrong. I'm not saying it doesn't work at all. It's just for me, I get higher hit rates and a more accurate, overall accurate results and trades by understanding why the market's moving and what I expect it to do based on the current and previous and expected data. Now let's move on. So we've got crude oil. This one really annoyed me yesterday, actually. I put a tweet out yesterday morning during London session, I think around that time, and I think price was around here. And I said, I'm looking to get long on oil today because I'm targeting $80 a barrel. All I want to see is a pullback. And this was, looking for a day trade. And since I tweeted that, we've just seen a rocket up to $80 and now this consolidation. So the trade worked perfectly. I just didn't get an entry because, we didn't see a pullback. So one of those ones where, you just got to smile or you'll cry. Yeah, the thing is, don't praise that 3.7 too much. I unfortunately it's not a verified track record. So, for all you know, I'm sat here lying to you, which I'm not. But it's one of those things. Don't just because I'm saying something, it doesn't mean it's necessarily true. And that probably makes me sound quite bad. But I just mean just because people on the internet tell you something, you need to take it with a grain of salt unless there is a verified thing there. And the reason it's not verified, the reason we can't do a MyFX book is because we did try to do that, but because we used to have a trader in Australia, and we've currently got a trader that travels the US and Europe, tracking all the trades on one account, it's just not realistic, unfortunately. However, that's why I've just started a Darwin account to try and do this again, which I can show you. Actually, I'll try and be as transparent as possible. Give me a second. So this one actually looks disgusting. So we've got currently in a 2.8% drawdown. The realized return is 0.21. So at the moment, this account's looking quite bad, although it's actually in profit, but the stats are quite ugly. But yeah, there you go. So I'm going to keep this one going. So Euro pound is one I was speaking about quite a lot recently as well, because I was looking to get short. I was short Euro pound actually, but I was way too early. I got chopped up in this weekly candle here. So I was way too early to this trade. And unfortunately, what I actually wanted to catch was this reaction off the weekly support along with the 200 moving average. But yeah, unfortunately, like I said, I missed it. So it's one of those things. But kind of sat on the sidelines with this one now. It's one of those trades where, hold on, I've got this written up, I think, again. Do I? Oh, I guess I don't. Anyway, I think if you check the Notion link I sent, one of the bits of analysis in there says that the euro pound is too cheap. So I don't want to be getting in when institutions are going long. That wouldn't make sense. So yeah, we'll see about this one, but it's possibly one I'll have to remove off the watch list pretty soon. Pound dollar is looking good. So overall, I am bearish on the pound dollar, but that's more of a more of an outlook into 2025 rather than a current outlook. In terms of the market now, I am looking to go long, and unfortunately, I missed this 0.5 level because this was obviously during the time when the markets were down and there was a lot of fear in the markets, and I wasn't looking to be placing aggressive trades or really any trades at all. So yeah, didn't take this one, but I am looking to get in at some point. If we can see some sort of pullback here, I'd be happy to enter and ride it back up to the upside. So it'd be something along these lines. The target is, oh, that's interesting. So in one of the bank reports, again, if you check the Notion, it's the last time I'll say that, but the recommended target for pound dollar is 1.35, and that's by the end of 2024. So if I can get an entry here, that would be really nice. You know, it lines up with the fib extension perfectly, and then that would allow me to get into my short positions for the rest of next year. So yeah, just waiting for a pullback on this one. If we can get one, the hourly's just flipped bullish as well. And what I mean by flipping bullish is we've got on the hourly time frame, you can see here the red is above the green. The red is a 200, the green is a 50. Obviously EMAs. So when the 200's above the 50, I identify that as a downtrend, and we've just seen the flip here. We've seen the cross, so that now tells me that the hourly time frame is now bullish, along with obviously the dailies holding the 200 moving average nicely as well. So yeah, buy positions on this one look quite good. I'm not sure what I average every year, to be honest. I don't think I've calculated that. I just calculated the average monthly return. But yeah, if anyone wants any extra information, you contact me on Twitter, or in fact only Twitter. That's all I use. But yeah, happy to give some clarity on that. What do you think about silver? I'm looking to short. Well, sorry, I am in silver shorts. Let me actually just double check the time I've got here. So, oh, that's perfect. Okay, cool. I've got almost 20 minutes to go. That's cool. So we are short silver. Technical, I'll just do this very quickly because I've already covered silver. So technicals, we've rejected so far we're rejecting the golden zone on the fib really nicely. Also showing some rejection at the previous level of support that we've got here. So to me, this looks like a nice break and retest. The issue is silver going to follow in gold's footsteps and be used as risk aversion? Obviously, you know, gold is rising, but silver's falling. So it's something to keep in mind, although I'm, you know, never as bullish on silver as I am on gold, never as bearish on silver as I am on gold. It's sort of like the ugly younger brother of gold is the way I see silver. Although, like I said, I'm still looking for shorts. My Twitter is just my name. It's Forex James XXS. Do you use any prop firm or just use your own capital? So Darwin X is the only firm I use, and I also use IG spread betting for my business account. So spread betting, if anyone's in the UK, spread betting is great to lower taxes. So that's one of the reasons that is essentially the only reason I use a spread betting account, because I really miss MetaTrader. But you know, when you start getting taxes and having to pay taxes, cutting off MetaTrader for a slightly worse program is sometimes worth it. James, what did your friend say? Sorry, James, what did your friend that works at a hedge fund in London say about what he's willing to do in the coming days? That's interesting you say that. Actually, I had a message from him the other day. Do you remember? I'm not sure if you guys remember, but I was saying, I didn't take this trade, by the way. I was saying that he was looking to short Dow, and I was saying that around here. And my view was that it looks too bullish to go shorts. So he caught all of this, and I was sat on the sidelines. He also caught all of the dollar yen shorts as well. And he's still sat in a dollar yen long from 110. But as for going forwards, he's not in any, his portfolio is relatively flat in terms of new positions, because he obviously hedge funds don't trade like us. Large market participants don't trade in the same way that we do, in terms of they will spend weeks analyzing, collecting data, writing theses, reports, and all that sort of stuff. And then they'll take, a little bit of time to actually execute, but it takes weeks to actually come up with a trade idea for them. It's not like us where we can, read a bank report, read an article, check a edge finder and find a trade. They spend a lot longer. Still in my yen positions, unfortunately. It's one of these trades I'm kind of trapped in. The target I have, I've reduced it from 165. I think 165 is in the bin. So 165 was a target I had for the end of summer. So in my book, the end of summer is, when is it? The start of September to the mid-September is kind of when I call it the cutoff. That's when, the summer holidays at school are done. That's when people are back at work. And that's kind of when the weather stops dropping off. But like I said, I think due to the intervention and the markets we've had recently, I just don't see it as realistic to get back up to, get to 165 within a month, especially with Fed cuts and Jackson Hole coming up. I think there's just too much going on, unless US data is super surprising. I just don't see it as realistic. So reduced it to 155, and that's by the end of the year, and that's been quite generous, I think. So I was watching the segment with Ivan and Nick before I came on, and they was talking about a trickle to the upside. And that's basically what I'm looking for as well. I don't expect to see dollar yen just fly back up to the upside, unfortunately. As much as I wish that would happen, I just don't see it as realistic. So my view is we'll get the US news. I think it's tomorrow. I need to double check that. And we may see some volatility here because obviously that will be quite dependent on the rate cuts, and that will help set a bit more of an idea in people's minds. But yeah, from there, it's very, very difficult to try and forecast. So isn't silver higher beta than gold? When it goes up more than gold and vice versa? Let me let me just do something here. So let's put gold on this side. Actually, no, sorry, ignore that. Let's get gold here. And then let's find silver. So let's compare. And we go here. So you can see here. So this is essentially what I mean by I see silver as gold's ugly younger brother. And it's not because silver is a bad asset. I think, I don't really view any asset as necessarily bad. It's just if I'm looking to go long on commodities, I'm much more likely to go long on gold because, if we look here, we could go long there. Whereas if we were longing silver, there's much less potential here in my book. So although silver's great, and yeah, you can get, essentially the same returns as gold, it's just one of those assets. I'm not super happy with silver. It's just not something I'm too bothered about. Whereas gold is just a bit easier in my book. So, if there's global tensions, if anything happens, it's straight to gold, whereas silver is, who cares about silver? And that's just my view on the markets. I'm not saying that anyone else should take the same view or approach. So just seeing if there's anything else I've missed. Dollar NOK, you'll hear me talking about the dollar NOK all the time. But yeah, still waiting on this one. Unfortunately, it's just, I think I might have missed this one. We still have this supporting trend line that's kind of giving me a bit of hope that we might see a bounce off here, a pull to the upside, and then the continuation down. But again, that's more of a hopeful thought rather than a necessarily a realistic thought. Because I was away, I had an alert set here and it was tagged, but I was away, so I missed it. And in hindsight, this is one of those trades where if I just took 10 minutes to just go and double check and execute, it would have been quite a nice trade. I am very bearish on this asset at the moment. Let's So let's have a look. So the dollar's seeing a push to the downside after the US news. Australian dollar's doing really well, actually. I'm quite happy to see that. Pound's pushing to the upside nicely. Yen is consolidating, which I don't like. I'd like to see yen go further down, but you know, what can I do about that? Unfortunately, nothing. So I'm gonna have to just sit through that. Although I, you know, like I said, I'm still bearish on the yen, so I'm looking for some sort of correction. Where to? I don't know, but just some sort of further move to the downside to correct some of the moves we saw. But yeah, feel free to keep throwing questions. I think I've got about 15 minutes left, roughly. So let's just see. CAD JPY. Let's see what the Edge Finder is pulling up actually at the moment. I've not checked the Edge Finder today. Okay. So euro dollar's registering is very bullish, which again lines up quite well. So if we look at the Edge Finder reading, and we take a look at euro dollar thesis here, we anticipate a bearish USD outlook for 2024 due to the Fed's anticipated rate cutting cycle, the normalization of the currently overvalued dollar, along with robust eurozone growth and a more stable ECB policy supports a long position in euro dollar. So taking that information and crossing it with a bullish Edge Finder could lead to a really nice trade idea. And this might be something I execute on actually pretty soon. The only negative thing is retail sales, but that's okay. Seasonality is bullish, very slightly, retail short. So actually, let's go back to euro dollar and see. Yeah, if we can break this 200 moving average on the weekly and hold above it, that wouldn't be a bad sign for me. And then wait for a H4 candle or a daily candle to come back and retest this level for the, you know, the much loved break and retest. Potentially a stop below this weekly candle. Target potentially up here. This wouldn't be bad in my book, although this is the weekly time frame, so it's quite a large trade. I think we need to have a bit more of a long-term outlook for this, but the idea is there. So something to take away with you. Look for some euro dollar longs, I think. USD CAD is ranging, but I expect bullish impulse soon because I have a divergence on the RSI. I hate dollar CAD. I think it's the worst pair. Where is your divergence? What time frame is your divergence on? I can't see one. Oh, on the H4. Oh, I see it. Okay. I assume you mean. Oh wait, hold on. Yeah, no, it's not the H4. Yeah, tell me what time frame you see divergence. What USD CAD, what's your vision? I saw you search to short. I'm already in. Just want to see your vision. Sneaky Ninja, I just spoke about euro dollar. Feel free to rewind a couple of minutes. So US dollar CAD, we're looking to short. Anticipated weakening of USD CAD as the Fed begins its easing cycle into 2025. With this move moderated by weaker global growth backdrop, CAD is also supported by its relatively stable economic outlook and the BOC's less aggressive monetary policy stance compared to the Fed. So that does sound really nice to go into short positions. However, I won't be trading this. I don't touch the dollar CAD. And the reason is because it's super, super ugly. US CAD by US session major asset. Yeah, it's stable price action. It's more of a range though. This isn't a market I like to trade because it's so stable. It doesn't provide me any entries really. I mean, you know, theoretically, you could just short the resistance, but that's just not the way I trade really. The only reason or situation I would really go in for a short position or any position on the dollar card is if there was overwhelming data. However, as retail traders, we often get data last. So even then, it's not really feasible. So for me, I like to trend trade. So, you know, oops, not that. We need this. So, you know, really, I suppose we could try to trend trade this, but it's not really worth it. You know, the whole market is just a range, really. But yeah, it's not something I like. Take a look at H1. I don't see a divergence here. Oh, unless you mean no. Yeah, I don't really see a divergence. Maybe it's my RSI settings. I'm not sure. But yeah, so dollar card, I'd be looking to go into shorts if I was to trade this. So Anton, you're looking at 1.37, which yeah seems realistic. I think. To be honest, I think given that we would be looking to short anyway, I'd be going more for the 1.36 ish. Let's see, 1.36. Yeah, I'd be looking more to 1.36. I think is a reasonable profit area. Okay, so that's that. Let's see what else is going on here in the markets. Oh, by the way, guys, is anyone in the A1 trading competition? I'd be interested to hear because I registered yesterday. I think there's 2 days left. I'm not sure how strict the rules are, but the first place person gets a copy of Edgefinder for free. I think the pro version. So obviously I've already got it, so I'm happy to do a giveaway if I do end up winning it, if that's allowed, of course. Bitcoin, actually, let's take a look at Bitcoin. It's not something I trade. I don't touch crypto, but I quite like to look at the chart, see what it's doing. It actually looks quite similar to the yen pairs in terms of we've had the sell-off, we had a little correction, now starting to having a little push to the downside. So what I quite like about Bitcoin is it's holding the 200 moving average. Excuse me. So this, in my book, looks like a mean reversion. So look at Bitcoin in the past. When we deviate, we come back to the 200. When we deviate, we come back to the 200. And we just had the same thing again. We deviated, now we're back at the 200. Now, whether the 200 will hold where it is or whether we'll have a little breakdown to lower prices, I don't know. But it's not necessarily a bad case for Bitcoin to potentially head to the upside. But yeah, I don't really know enough about Bitcoin to really give an educated idea on this. I don't really know how it works. Looks like it's actually a risk-off asset, just looking at the past couple of days or past sort of weeks price action here. But yeah. Yeah, Max. I didn't mean rules in the trading rules. I meant the rules around the price. So if hypothetically, obviously, if I do win, happy to let A1 give away my copy. But yeah, I think that'll be a fun little competition. CAD leaning oil exporter to USA. Oh, sorry, leading. Yeah, I mean, oil's a huge part of the Canadian economy. So when oil does well, CAD does well. So that's also a factor. So if we do see tensions rise in the Middle East, it's likely we'll see higher prices on oil, which obviously will in turn help the CAD. Where is oil? Oh, crude oil. Here we go. Interesting. Let's see if there's any news on oil. I do like to trade oil. I think it's quite a nice asset, really. I think the price action is very clean. Oil prices ease as markets refocuses on demand worries. So if oil prices are easing, we reached $80 a barrel. We're bouncing off the daily 200 moving average. It wouldn't be a bad idea to maybe look to go short on oil here. Now, I wouldn't go short yet. I think I'd need to see a bearish candle close. Actually, in 4 minutes, I may take this live, to be honest. If we do get this candle to close here, very tight stop. We've got nice support down here. Yeah, we'll see about this one. Maybe I'll take it. Very tight stop. Take profit. Potentially just here. I'm not sure I want to be too greedy, but we'll see. I might do an alert if we do get in. How do we enter the comp? Just Google 8-cap trading competition. It'll come up. Please analyze oil. Yeah, I'm on oil right now. Down by 0.5% at 59,000. I assume you mean Bitcoin on that one. There you have it. Gold's at 24.75. Is gold dropped? Let's see. Oh no, sorry, it's risen. That's nice. Yeah, it looks like we might get the 2,500 level this week, maybe. Depending on US data, it wouldn't surprise me if we do get up there. The question then is, can we hold above? So will it be a case of we tag anywhere? It could just be previous highs or previous all-time highs or even 2,500. From there, do we come back to retest this level and continue up? Or do we see what we've seen in the past when we hit all-time highs or break and form new all-time highs, we fade and come back to the downside before heading back up? So that's something to be cautious of with gold. Just keep in mind, it's not uncommon to see gold have a little sell-off after we reach all-time highs from a lot of profit taken. But then, of course, still bullish on the economic front for gold. 2,500 by tonight's Asia session. It could be. It definitely could be. Not something I would rule out. But yeah, just waiting on this oil candle close. If we can close below, oops. So I always like to enter off a bearish engulfer. And the way I identify that is if we have a little range like this, so we can see we've had this consolidation. If we can close below this, so in my book, it would be there. That would then classify this as an engulfing candle for me. And that's what I would enter off. And that just, for me, confirms the momentum's in the right direction. Whereas if we close back inside this range, to me, there's not enough sellers in this market to really continue to the downside just yet. So I'd like to see that, but 1 minute left. So let's watch. Actually, let's see if Edge Finder has anything on oil. Doesn't look like it does. US oil, okay. So it's neutral. So that's not necessarily bad, but this seasonality is really nice, actually. Almost a negative 4% in August for the past 10 years on average. It's tempting. I like it. 41 seconds. So let me go here. WTI. So I'll be taking this one on my Darwin account. So let's see. Fall to 2,365. Potentially. Yeah, like I said, I'm not really looking to get into gold. I'm more just watching from the sidelines, happy to see. If we do get a nice pullback, I'll look to enter. But right now, it's just a bit too risky. Just looking here. Yeah, it's not perfect. I'll take a stab. We'll see. This isn't my personal account. It's a funded account, kind of. So happy to take some more risky plays on this one. Don't follow this, by the way, guys. This isn't a signal. I'm not here to provide signals. It's just the opportunity's presented itself, so I'm happy to take it. There we go. Can't drag a stop. There we go. Okay. So I'm in oil, so we'll see how this one goes. GBPJPY, please. After a big drop in COT long. After a big drop, COT is long. Let's see. Do you mean COT is long on GBPJPY, or is long on the yen, or is long on the pound? I need a bit more info on that one. But my view is we will see the yen go lower. I think that although we've had some recent developments on the yen, I just don't see it as sustained. So we can see, if we look at dollar yen long, maintained bearish view on the yen, expecting USD JPY to reach 155 by end of year or by year end. This expectation is driven by carry trades and structural Japanese outflows, supported by the Bank of Japan's continued monetary easing stance compared to a relatively tighter Fed policy. But if we look at the data behind the yen, and again, this was shared earlier, so if you want access, feel free to scroll up in the chat if you don't have it. The expectation for USD JPY, that's it. USD JPY stabilizing as positions. Don't know why it says that. Positions unwinds near completion. I think must have been sleepy when I wrote that. But yeah, essentially the carry trades of unwind, from what I can see, it's about 90%. Now that's just based off mainly COT data. So, it's not rock solid. Definitely room to see some continued unwinding, but I think the majority is done for now anyway. Long on the pund. Are you Scottish? Yeah, I'm long on the pound as well. Yeah, Anton, exactly. I agree. Yeah, cool. So if this trade works out, you can feel free to thank me, but if it doesn't, then it's not my fault. So that's how it works, isn't it? But yeah, seriously, that's not a signal at all. If you did take it, the result's on you, not me. Excuse me. So let's see. Yeah, the yen just isn't doing too much. Dollars continue to fall, Australian dollars rising, pounds rising. So I wonder if there's any day trade opportunities on pound dollar. Doesn't really look like it. There's not much here. H4 is technically in a bearish trend. The daily looks really nice. I'd love to see, the weekly. I'd love to see this weekly candle close bullish. If we can get that, I would wait. If we don't get in before, I would wait for a 50% retracement of this candle. So roughly here with a stop around there, and then take profits at the 1.35 level. So that would be my approach, and that's worst case scenario if we can't get in any earlier. Yeah, Anton, I think the yen is going to, sorry, dollar yen is going to be a bit of a struggle to hold. It's going to be one of those one that it possibly could fluctuate quite a lot. But considering, I've been sat in it for such a long time and I've sat through quite a hefty drawdown, I don't really see any problem continuing to hold for now anyway. Unless we get some super hawkish news from the BOJ, and that will sort of obviously shift the sentiment to a more continued bullish yen, then happy to stay in. Oh, it's time for me to go.
Hey James, it's me. I'm here to kick you out. I'm kidding. Thanks for coming on, James. We love having you on, and I'm sure we'll see you again this week.
Yeah, absolutely.
So, guys, I've been putting James's stuff in the chat as he's been going. He's got a website called Elite Traders. They have a lot of awesome services on there. I highly encourage you to check it out. And he also has his own YouTube channel, Forex James. So be sure to check him out and all the places you can find him. He has a lot of knowledge, and we love hearing from him. So James, we'll see you next time you're on.
Yeah, thanks a lot. See you later. Have a great day.
All right, guys, we're going to take a quick break, and then we're going to have the one and only Chris Pulver joining us next. So stick around. We'll be right back.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey everybody, happy Tuesday. Welcome back to the session. Looking at the SPX this morning, just had a little daily strangle workout for about 60 cents credit. We just popped up here with a gap up. We're just hanging out here for the first 37 minutes of trading. Was enough to take out enough to hit my 15% take profit. I want to zoom out for a moment here and have a look. I just got a copper trade filled this morning as well. Let me add this into my chart. 3.2 is my naked put, and then 2.5 is my long put. So this is a -3 and a +6. So this would be a 10/28 expiration. I should put that at the top. So I just got that trade filled this morning. I think it was October 28th. Let me double check that. So that's already down. So 70, 80 cents credit on the SPX. If I go to copper HG right here, October 28th. Yep. So I've got 3 at the 3.2. Those are the sell puts, and then 6 longs at 2.5 to hedge, lower the buying power, and should help me grab it about $250 of credit, or $250 profit around the end of October. So 3.2 is down here into what I think is pretty solid support right in here. So I'll be looking to, if my position is threatened, I have the long put for a hedge, and I could also roll out my naked put for additional credit. I think right now, looking at the NQ, which is my futures feed for the NASDAQ, I'll just go to this chart here. We're trading at 18,907. I need to see if this will stay below 19.1 by the end of the month, and I'm wondering if I could put on like a 17,000 hedge right now for additional credit. See if the bottom is in. Let me go to NQ here and see what that's trading for. So if I went out to the other expirations that I have, I think it's the end of the month. NQ, August 30th. So I do have a hedge in there. I could probably put in another 1, get some credit at 17. So let's see, NQ there, and then out to October. Those are already hedged. It's this one at the end of the month. I'm gonna see if I can get a 17,000. August 30th, 17,000. So it does give me some credit. I do want to probably add a little bit more. That low is 17.3. I go to 17,000. So we'd have to drop in 2 weeks. We would have to drop around 10% more on the NASDAQ. I think that trade's pretty safe. Profit-wise, 42.75 credit. I'm probably going to buy something against that. So if I did a 1, I've got this out of the money hedge right there. Choices. What's the buy power reduction if I throw it on there? 2,300. It's not bad. I think I'm going to take this trade. So 17,000. That's a 7 delta. That's quite a bit lower. I'm going to go to a 5 delta just to see what the credit is. 16. So $600. $600. That's out of the way. 16.7. That's fine. We're slightly higher in the IV. I'm going to take that trade there for $31. End of August. That's pretty good credit. Throwing a little extra gravy there. All right, and that's only tying up about $630, which isn't too bad. Let me double check this on my IRA accounts, and then we'll get to some charts and analysis this morning. So that one needs to be hedged more. I think I did this one just on the margin accounts. So I'll do 1, 2, let's check these. So $600 and 600. Okay, I'm going to take that trade. So 30.50, 31.25 mid. I'm just looking at it. I'm going to see if I get $31. $31 there. Not filling. Okay, let's try 30.50 perhaps. Rejected. Love it when it does that. Try that again. 16. I did it at a 5 delta. 16.7. 16.750. Okay, I'll do the 16.7. Try to get $30 for it. Don't reject my order. 29.75. All right. Similar. 9732. Okay, getting filled there. 911. Filled there. And 151 filled there, hopefully. Okay, so 29.75, just one contract. 29.75 times 50, so that's 14.87 on the naked put. And so I'm just going to put a little hedge against that just to be a little bit safer. So my position right now, I still have this 12,000. That's a 1 delta long put that should help make up for any type of move. I can roll this too. I don't think we're coming back to 16.7 by the end of the month. We'd have to have another hefty dump to the downside. So if we come down to 16.7, that would be, we'd have to have a 12% drop by the end of the month to get there. So that would give us how many weeks of trading? About 2 full weeks of trading, and we'd have to drop 11%. So I think what I'll do is I'll keep the 12,000 put, which is way out of the money. If we have a big drop, that's okay, because that 12,000 should be doable. But that'll help me generate about $1,400. I did that on 4 accounts, so 1475 4 accounts, about $6,000. And I think that's looking pretty good. So we had good PPI numbers today. I think the market loved it. Came in softer by a decent amount. We have CPI tomorrow. I said this earlier in the week. I think the CPI print is intentionally higher because what I've seen on the Fed websites is we're looking at like 2.7, 2.74 for the year-over-year print. So I mean, I'm not saying that it's tomorrow's news today, but I wouldn't be surprised if we come in better than expected as far as lower CPI prints for tomorrow. So I think the market's going to like it. But we're also pulling back so aggressively that I also wonder if this market is going to, be kind of satisfied at the equilibrium point. So SPX again, like gapping up, or the SPY gapping up. I mean, all the nonsense that happened over the last couple of weeks. So we're pulling right back to that 50%, right? So if we start to turn over a little bit, you look at the Nikkei as well. I mean, all these things are lining up for. It's either going to be like a choppy kind of buzzsaw where there's no real winner. Bulls and bears are fighting back and forth, or the bulls have just kind of gotten themselves out of trouble because they were super long. Get smacked in the mouth a little bit, and then they're allowed to kind of get out of trouble, and then the bears are like, okay, it's our turn now. Although, and this would be very counterintuitive, but if inflation comes in lower than expected, you got to wonder like how aggressive this continues to rip. And I do think that if we end up sniffing these all-time highs soon, that's not a good sign. Like I don't know. That's my intuition. Like if we just have one ridiculous volatility event and we come right back up to those highs, part of me wants to sell this thing like during the election, or maybe by the end of the year, and just trying to fade that move, because I think that this type of volatility event, if we go down 10% and up a 10 or 11% to get back to the highs, I think we're just looking at a ton of volatility, and that's going to be wild, right? So I do think this is likely going to turn over to the downside, at least having a VIX move up. I mean, we've gotten below 20. This is one of the largest declines from this type of volatility spike. One of the largest declines we've seen ever. So crazy outliers from last week on Sunday, Monday, and what happened the rest of the week. And we'll see how it settles in. But I wouldn't be surprised if we see the VIX head up towards high 20s or 30s again. And we'll see what that looks like. Is that going to be on CPI data? Is going to be on Jackson Hole, which is the 22nd, 22nd through the 24th. So that's a Thursday through Saturday. So I don't know. Just monitoring. I'm debating right now. It's like I've got this naked put in. I think what I might do, or not naked put. I've got the naked put, but I want to look at it maybe another hedge. So I've got a long put here that's probably worthless. I did pay for that. I'm still looking at net profit. I'm trying to get this thing to trap. The 19.2 by 19.1 is a trap for $5,000 as long as we stay below 19.1 by the end of the month. So I do like that trade. If I could combo that would be a nice little combo. Or if I keep the put running, we'd have to drop, like I said, 11% for that trade to be threatened. And I keep this 19.1 level. It's like that's $5K in profit if we stay below that, plus the $14.75 I just collected. So by the end of the month, per account, that could be a nice little jump of about $6,500. So I don't mind that. But like I said, let me get back to the charts. I do think that volatility is going to end up, poking its head back up a little bit. Maybe we rise into the high 20s or maybe 30s. We start getting into the 40s again, it gets a little bit dicey out there. But the good thing is data's coming back. I keep looking at the Nikkei overnight. Nikkei is up again. We've successfully, closed above the 382. So for right now, this tells me that we're likely still heading back into this 5.0, this 5.0 pullback zone. But this is definitely the one to be watching. And I know there's some correlation here. It's global, but what happened with the yen just over the last few weeks when we topped out here in July, the Nikkei is going to be a big contributor to whether or not we still see risk on trading around the globe, certainly in the U.S. So if the Nikkei is above the 382, you can see pretty clearly like there's strong support in here right around this supply pocket. So there's strong support right in here that could become resistance, and there's inefficiencies right with this current spot. So if we drift up a little bit higher, that's a 5.0 pullback, that's equilibrium. I don't necessarily think the thing just, hits this level and just dumps to the downside. I don't think that's really the play. I could see, we hit this level, we find some intermediate resistance. And if we do get on the right-hand side of the trend line, it looks a little bit more vulnerable that the bears might make an attempt, right? They might make an attempt to push this lower, but all it may do is push it to a higher low, and then we're back in recovery mode. So this has been so fast that it's kind of hard to get a sense of structure here. Like I'd be watching, we put in a nice low right around this 33.8 level, right in here. So if we get back to this like 50% zone and we sell off, I would look to see if this level holds to then turn back up. So we'd have a low to high, pullback, and then a higher low to higher high, and we come back into where this whole thing started its decline. I don't think that all-time highs are coming anytime soon. As a potential trade on the Nikkei, I wouldn't mind getting something off the lows, but nothing yet. So, all right, still expecting the NAS and SPX to test the 200 EMA. I mean, yes, in a way. Let's take a look at those really quickly. Let me bring up this other workspace that I have and make this slightly easier. So this harmonics and pivots one right here. So here's the NQ. The NASDAQ did hit the 200. It was the SPX and the SPY, anything that's S&P related. So on a positive side, on the daily time frame, we came to the 50, the 100, the 144. We don't have a crazy extreme on the 200 EMA, but because we did break back below, right? I mean, we broke below the 50, and right now we're kind of testing the 50 again. So I do see this quite a bit where we, break down, retest, and then we settle back in to the low, test that 200 EMA, and then perhaps this is a, bit of a chop zone for a while before the market can justify trying to get back to these highs. Again, there's a lot of ways that I can splice this up and say this is what I think is going to happen, but let's just keep it really simple, right? If I go high to low and it pulls back halfway, if this market is not done with this bottom, then we're probably going to come back and try to have a retest of either halfway down or all the way down to retest the low and find that 200 EMA. Look, if I have an opportunity to buy this thing at the 200 EMA, I would take a stab there. Dollar cost average my way even lower if I needed it to be. But if we're going to go from this high of the year to this aggressive pullback, and this just gives us a chance to buy low and then see the market revisit the highs, I mean, that's a good trade. That's an 11% move. On an index, that's pretty good because there's going to be individual stocks if you can find them, and maybe it's the top 10 that we know and love, and not everything else. But it's still a chance to get a nice little gain. And obviously, if we're using, options or using futures and we get the same type of run, those leverage instruments can allow you to make bigger gains than just the 11% you get on the index. Okay. More influential CPI figure year over year. I think year over year is more influential. Yeah, the year over year is what everyone's watching. And realistically, if you want to look at like the Fed inflation measures, okay, I'm going to put them in priority. One is going to be the PCE, which we don't have this week. Okay, that is what the Fed is primarily using for inflation. And then I would go CPI year over year, and then I would do PPI year over year. And how are they trending? Okay, so this week we have PPI, which came in softer than expected, which the market's liking right now. We gapped higher. We're just kind of hanging there for the day with a slight gap up. I mean, I'm looking at the SPY, 533 to a gap up of 537 or so. That's pretty decent. That's a pretty good gap. But if we come back into that halfway point, I mean, this happens all the time with price action. We go high to low with the big flush. We pull back to equilibrium, and then the market comes back to retest. Right? Is it going to be that easy? Not necessarily, because this market is built with positive drift. So, I mean, I could see volatility spiking up, but what right now is going to cause the downward move, right? I mean, unless the Nikkei is going to have a terrible night and we're going to see currency strength, where if you look at currency strength here, okay, if you see the Japanese yen is up on top and the Swiss yen is up on top, sure, it's looking bad for that day of trading. But if the Japanese yen or the Nikkei, or I'm sorry, the Japanese yen, the Swiss, and the dollar for that matter, if we have the zero line, if below the zero line you have Japanese yen down here, you've got Swiss down here, and you have dollar down here, that's a risk-on trade. And these indexes will continue to climb and kind of climb the stairs back up. But like I said, 50% zone, that's a good spot for the bulls to get out of trouble. That's a good spot for the bears to come in and maybe defend. And we'll see if it tips over a little bit. Maybe we have, I mean, for crying out loud, we can have one day of selling. I just think everyone right now is so fresh off of these scares that one day of selling is going to feel like, oh my gosh, it's going to be a bear market again. I mean, so if this is the Nikkei, but if we go up into this level and we sell off for a day or two, is everyone right back on board? Like, deleverage, get rid of your, it's like dump everything. It's not really the case. You know, same thing on the S&P and the NASDAQ. If we just turn over, if I go to the SPX here, I mean, we're right back into that supply zone. So right back here, we're hitting it. You know, if we're looking at a trend line, it's, I mean, it doesn't have to be insanely complicated. If I just open up my editor here, let me find my charts. Okay, so I've been watching this since last week. Once we started this is ES, this is SPY, and that's SPX. And guess where we are right now? We're in that yellow zone. Okay. So to me, this is where price finds equilibrium. If we're looking for a short-term rejection, that's where we turn. If you are a bear right now, okay, if you want to sell this market, I understand. I mean, it makes sense if you want to look to sell. The problem is, I wouldn't sell this thing without having some type of confirmation. I wouldn't sell this thing unless we have, you know, price back below the VWAP on the daily and weekly. So I'm not a seller right now. You know, this morning was a nice little short-term strangle. If we get back below for the week of trading, if we get back below the VWAP and then we look for a push lower, that's fine. I'll look at a, you know, 0 DTE or something by the end of the week. But I don't have any levels that I really love right now. The one that stuck out this morning was before we had the market opening, we had this 538 and we gapped up to it, and we're probably going to sniff it out this morning. So if we hit 538, that's already a pretty decent move on the day. That's up nearly, you know, $4.50, which is just shy of 1%, you know, which is normal. I mean, most of the time the markets are moving less than 1% as far as the distribution goes. So I could see us just kind of hanging out for the day. But if we leave a gap like this and somehow tomorrow the news is taken differently, maybe we fill the gap tomorrow on CPI. I'm not sure, but you know, we got some call option sentiment that's leading the way this morning. I see more to the upside than I do the downside. So I think that after we have a little push up, it's just hanging in there. Okay. So watching closely. If I'm going to be a seller, I'm not trying to call the top here. I would say watch your structure. If you go down to a smaller time frame, okay, this is the low right in here. Speaking of, I think what I might end up doing, let me do one more thing here. So on my SPX trade, got a couple more in here. So I've got that put. This one for ES September. Let's see. Could I get a decent trade in for September? Let's find out. Or not September, for August. And I go something end of the month and see. It's going to be short term, but I'm going to see if I can construct the trade here. So ES trade out to the end of August. So if I go August 30th, could I put in a trade here with a little bit of a trap? And how low could I put my put? I could put a 5. I like this trade with higher IV. I'm going to take this trade. This will be another kind of bear trap trade. Frank, if you're watching, this is a trade I was talking about yesterday. But I'm going to put in. It just depends on how it's set up. So I'm not going long futures here. I'm going to actually do a futures options trade. But if I put in, we're currently trading at 5,400. I'm going to look at a 25. So 52.60 on ES. I'm going to try to go 50 points wide there. So that's a $2,500 profit trap if I get it. And then on top of that debit spread, I could go a little bit wider, 52.60 to 51.60. That goes 100 points wide. Now that's a profit trap of $5,000. Where would that start at? Let me see what that starting point is. That starting point would be 52.60. So 52.60 is down here. So 52.60 right in here. If we get below that, that'd be my 5K profit trap. And if we revisit the lows, that's fine, but I put my naked put all the way down lower. So let me see how this trade is constructed, see what the credit situation looks like. So if I do 52.60 by 51.60, that's 100 points wide. That would be, get rid of this trade. Let me just clear this out. So 52.60 by 51.60. So 1450 in debit. But that is mostly, 42.75 max profit for the debit that I pay. So if I add into this a low delta, which I can go below right now, I can go below. So 1450. Here's the choice. Do I go? If I doubled up on that one, that's not good enough. I'd have to go like 49. Even that's not good enough. I don't have enough time in the trade to get the premium that I want. So what I was thinking, if I did the debit spread here, and maybe I can move these down slightly. Actually, you know what? I'm just going to clear the trade. Put in, let's go to a 5 delta. And then put in a 1 delta. That's $300. So if I do 2 contracts there, that's $670 for ES. And if I add in a inexpensive put, I think these are all kind of pricey at this point. I don't know. I don't love it. I think it's just easier to go out farther and trying to do something like short term. And NQ has a little bit more volatility and premium. So anyway, let's go back to the chart. Take a look at this. Right? So connect the lows. That's your trend line that the bears would have to break, right? If we get this low, and we're coming back into this resistance, this is support becoming resistance. It's right there. This is kind of the equilibrium trade that we talked about. If we are getting price action below this level, take out these recent lows around 53.30 or so. These lows around 53.30. We take out those lows. Then sure, if we're down here below the lows, it looks like we could have another thrust to the downside. Like I said, if we're below the daily and the weekly VWAP, then maybe I bias myself a little bit to the downside for a sell-off that gets the VIX higher. Kind of bracing for that, but not getting like overexposed. Okay. So anyway, this is what I'm going to watch on the SPX. This is a 15-minute time frame, but I'm taking in that low from Monday's open last week, and we have been clawing our way back. So I'm not bearish. Okay. I think if we're going to get bearish, it makes sense that we could try to guess here to get a good entry, but I wouldn't feel comfortable saying that today's my expiration. Even Friday's my expiration. Realistically, the trade that I took yesterday, and I did this with Frank, we talked about a volatility play. I looked at this as if I were to, buy a call and buy a put and sell a call and sell a put, it's given me about $25 of profit on the upside and about $30 of profit on the downside for a trade that cost me about $16 to place. And I did this out to the end of September. So 9/30 expiration, I don't have to be perfect on this trade. If the S&P wants to go up and get me by, even if I go up $20 or so, I make money on this trade. I turn a $16 debit into a $20 credit, make $4 net. That's fine. Profit target wise, let's say I go after like a 15% take profit. So if I'm at 16, it was like 1640 was my fill. So 1640 times, let's go 15%. I'd make $246 a contract if I just hit a 15% take profit. So I need price to trade around $18 or $19. Okay. So I have this trade running on the SPY right here. It should be down here in my platform. So SPY, September 30th. So I've got 1, 2, 3, 4. So I have the 537 by 557 give me $20 of profit to the upside, and then the 535 by 503, $32 to the downside. That trade cost me $16.40 yesterday, is trading for $16.40 and change today. So it's break even right now. I've got time, I've got direction, and I'm going to see what volatility wants to do. I'll be watching prices. I've got my levels on the SPY. I talked about this yesterday. So at 537, I'm gonna put a break even at 553. So let me set a chart alarm. So 553 would be a break even. 553 is a reverse iron condor break even. And on the downside from 535, I believe. 535, so 519 or lower. So move this one up to 519. And 519 is going to be reverse iron condor, break even. And I'll manage those trades. So if this is, inching higher to test this sell-off point from Thursday last week. Again, a lot of stuff has happened over the last couple of weeks. This was FOMC with Jerome Powell's press conference. Thursday, the market took it all back. Friday, the market got worse on non-farm payroll. Sunday to Monday, the market just dumped. There's your freak out point. There's your volatility event. And so we're riding the ship so far. But as you can see the same chart that I see. It would make sense to me technically that this level holds for resistance. And if this level holds and we have one nasty spill to the downside, that could be enough to topple this thing over and at least pull back a little bit, maybe come back and retest that low. But what I keep going back to is what is the data? What is the catalyst? What is the driver that might be influencing that move? If inflation data is coming in like as expected or in line with what the market likes, which would be softer inflation, then we're going to see if this Fed decision changes in September. Right? I mean, the Fed decision for September is still seesawing on this 50 basis points or 25 basis points cut. So here it is, slightly favored at a 50 basis points cut for September 18th. There's nothing that the Fed has said that they're going to do 50 basis points. There isn't. I think this is just my opinion, but I think the best path forward for the Fed is to do what they say, stick to the 25 basis points, and do 25, 25, and 25, and just let the data come in. I think any type of like give in that the Fed has, which is like they'll go more aggressive, they'll do 50 basis points or another 50 basis points. I think that shows that they're cutting on the verge of a recession. Because I don't think making cuts deeper and faster is necessarily going to give the market confidence. I think cutting as is and letting the data come in as it's supposed to, and hopefully the data, of course. I mean, this is like, look, I think the Fed is just like crossing their fingers like everybody else. At this point where it's like we dodged a bullet on Monday's open, considering it was such a nasty flush down, and we've been ripping from there. That is the market giving everybody a taste of what could happen in a high volatility environment. And so if we're coming back to equilibrium, I think that gives everyone a chance to just play defense, not lose their butts, and figure out what to do next. And so mechanically, how can you kind of trade through that? Look, I'm not all bullish. I'm not all bearish. I think it's going to be time to see the market where, the bulls have had some fun. They've ripped up here to these past levels. I can see the market chopping around in here. I can see this trend line being what we have to pay attention to. Look, there might not be a lot of anything that happens. I mean, not every day do we come to the market and just see like 1%, 2% rips every single day. It doesn't happen. Most of the distribution in the S&P and most of the distribution in these markets are less than 1% a day. Like 70% of the time, you're getting less than 1% moves. So even with high volatility, that's still elevated. The VIX is still at 20. I mean, we're at 13 a month ago. So it's still elevated, but I just think a little period of some chop is appropriate. And go back to what the market does most of the time. Most of the time, it doesn't move more than 1%. So anyway, that's where we're at. All right. So if I go through my kind of top down, we've got to watch some levels very carefully. Here's the SPY. Same thing on the SPX. I've got the trend line already set on the SPX. But SPY, SPX, same type of thing. Here is a trend line to just tag the low right there. If we break that trend line and roll over, like I said, on the VWAP situation, this darker blue line is a weekly VWAP. And so right now in the futures feed, if we're below that, I would look for futures to head lower and possibly look at, if the SPY is going to gap down or the SPX is going to fall. I'd like to see a directional day that I could put in like a long put. I mean, one of my favorite trades, if I have confirmation would be if I get this big gamma level, down here and we're below VWAP for the day or for the week, to put an out of the money put that, let's say, I don't know, I'm just looking at a price point here. If this is the SPY and it's a 536 and I do a 530, So let's say we're at 536 on the SPY. If I buy a 530 and I go out maybe, 3 to 5 days, that trade might cost me like $2, but it has the potential to trade at $5, $6, $7. So I mean the upside potential is pretty solid, which I like. And so if I find an opportunity like that, I'm way more inclined to do that for a 2 to 3 day expiration kind of during the week. If I I don't know, I kind of like the trade. I should have already been in the trade, but I'm like, what else do we have for today? I don't want to. I don't want to fade this and say like, I'll just put a bear call spread in, because we could still drift higher on the day directionally. I think 539 on the SPY is doable. 540 is a round number, so I don't necessarily want to put in a bear call spread, and I don't want to put in a bull put spread. I'm just going to stand aside for right now. I just don't have a good trade that I like kind of intraday. But my intraday trade was actually early on. I took it right around opening bell, and by 9:58 I was profitable. So that was this trade right here. If I go back to the SPX, so the trade filled for $4.10 and is trading at $2.55. So I've already taken out about $1.50 of premium, and all I needed was 61 cents to hit my profit target. So that works fine, because today is doing what? Nothing. Even with a gap higher, price is doing nothing. Those days are perfect. Okay. So does everybody see? Can you pick up what I'm putting down? Right. I mean, if we're going to be bearish, I don't think it's like just call the top and go crazy short. I think what we have now is we have a situation where we've clawed back. We're in this equilibrium area, and we're going to see if this structure holds. Okay. The bulls have to make a break for fresh highs. They got a gun for this, Thursday sell-off. The bears would just tip things over on the right side of the trend line and see if this ignites any type of selling. It doesn't have to be crazy, but it's like I want to see if the technicals fall in line. I don't think the VIX is going to spike up to 60 again, but if we go from 65 down to 20 and then back up to 25 or 30, that gets the market a little bit more excited. Probably not in a good way. If you're not hedged, if you're not playing anything to the downside, then it's not going to feel great, right? Long condor for higher volatility. You want to do a long condor or a short? That's what I did. I did the reverse iron condor. I did the long. So I mean, I bought the guts and I sold the wings. If that makes sense to you, right? Like the 537 I bought, the 535 I bought. So that's my call side, that's my put side, and then I sold against that. So I'm looking for that vol. This is what it looks like on a risk graph. It's this. So this is my 537, and this is my 535. I paid those debits, so I mean the debit is here, and as long as we get beyond a certain move, it pays out with $16 one way, pays out with $16 the other way, and I've given myself on the bullish side about $20 of profit and about $32 of profit here. So you might ask, like, well, why'd you go so why isn't it equidistant? Well, because I think on the bullish side, I'm a little bit less of a believer that the market's going to go up 30 to 40 points to the upside. I'm more of a believer that if we're going to have a fast move to one way or the other, I think the fast move is more to the downside than is the upside. The fast move would be down. The upside would be the slow, steady grind. But either way, if I get $20 of credit on either one of these trades, that would be enough to help me take my profit. That's probably, if I get, that'd be $3.60. So 360 divided by 1640. That's a 22% profit target. I'd be happy with that. 15 to 25%. I like those profits for some high probability wins. Okay. All right. I think I beat up the indexes enough here. Just to at a glance, we're up on the SPY, we're up on the Qs for right now, but just watching closely, here's an easy trend line to set on your Qs. Okay. Same thing here. NDX, just set your chart alarms, set your trend line, set your chart alarms, keep your eye on price. And that's what I'll be doing here. So we're pulled back right in these equilibrium zones. I'm not a bear. I'm not a bull. I think this is where the market tries to figure it out. If it wants to go higher on CPI tomorrow, fine. It just eats into Thursday's sell-off. That's not a bad thing, right? It makes my NQ trade look even better. But if we roll over tomorrow for any reason, or roll into next week or Jackson Hole, I just have to be ready for maybe an uptick in volatility over the next couple weeks. Okay. Dow. I did look at the Dow. I actually may look at a ratio spread here. Let me see what's going to tie up in capital. Let me go to the daily time frame. So on the DIA, I'm going to try to put in a ratio spread. So I think this one already expired. Let me double check here. I think I've got this trade done for profit already. DIA, I do not have any DIA. So I don't have any Dow right now, but I do like this area of around 365 by 360. Would I take some ownership of the Dow? I would. I would own the DIA. I think there's, the scary part is how aggressive this run was from Q4 of last year. That's a pretty scary run. I don't necessarily think that we're giving back all the profits for the year. I hope that's not the case. I know the Nasdaq took away a huge chunk. It was up like 26%, dumped 20%. The S&P was up 18%, dumped 10%. So it did take a lot of the profits away for the year for the indexes. So that being said, if the IV is high enough to get a decent credit here, let me evaluate what I can get out of maybe a 365. Let me check this out. Yeah, I'll do some currencies. I see a pound, yen, euro, dollar. I see them. Just give me, I've got 15, 20 minutes or so. Okay, so Dow trade. Let's get to, this isn't a bad spot here, 66 days out. If I did the 365 by 360, so I can get 225 credit, collect 725 in income. I could take the ownership on this trade. It only ties up about $3,600 in buying power. That's not bad for the shares. So $360. So with a margin account, that's 18K. I can do this on my margin account. I'm going to try to go after some income here. The 365 by 360 ratio spread, collecting 225 credit. IV's at 36. Not bad. Probability of profits around 95%. That's also pretty good. So this is an income trade that if I took the assignment, I'd take the assignment and I would repair it. Going out 30 days or so, let me see what a covered call is. If I own the shares of the Dow, I go out, let's say 30 to 45 days. And at the money is trading for like $8 or $9. So if I took on shares, I'm going to own the shares at like 350 and change. I'll go out 30 to 45 days, grab another $7 or $8 credit, lower my cost basis on the Dow. I'm going to take the trade. So this October, 66 days out, I'll do the 365 by 360, try to grab some income here. This is going to be better for my margin accounts because there's a little bit more option buying power. So I've got 1, 2, 3 accounts of the 4 margin accounts that I have. So I'll take that trade. I'm going to take that trade. So 225. Let's see if we can get filled. The spread's a little bit wide. As long as I can get over $2, I'll still take the trade. As long as I get over $2. The nice thing is if I do take ownership here, so I would get assigned at 360 minus hopefully the 225 credit spread on the ratio spread, and then also a $5 credit on the actual long put. So I'd own the shares at 352, which means that for right now, the Dow all the way down to 352, we'd have to have an 11% drop on the Dow. For number one, I'd have to get assigned. Number two, if I own the shares, we'd be 11% lower. I'd be in the category of, or the camp of buying it anyway. If we're at 10+% in the Dow, 10, 15, 20% discounts on the Dow, I'm looking to buy it. And that puts me right around 11% from current price. And from the top, that would be around a 15% correction from the all-time highs. Again, makes sense to me. Like the trade, doesn't tie up a bunch of capital. Let's try to get 225 and throw this trade in. So 35, not filling. Let's try to get 2. Oh, fudge. Now I see $2 on the mid. Yikes. Well, that's not cool. Let's see here. Vega's pretty high. Do I need to have that? No, not out that far. 94% chance of profit. All right, I'm going to try to get this filled. I'm going to put a pending order in at 215 and just let it sit. So 215 credit, I'm going to let that sit, and then I'll add this into my other accounts. So we'll go here. Okay. There we go. So let me add that in, and let's start doing some knocking out some currencies. So I have a DIA ratio spread. Expiration is 10/18. I'm doing the 365 buy put, 360 sell put, going after 215 credit pending. Willing to own. And so I would take away the assignment at 360 if I'm assigned, and then minus $5 for the long put, and minus 2.15 for the credit on the trade. That'd be a break even at 352.85. So break even 352.85 to wheel or repair. So a wheel strategy is if you own the shares, you just add covered calls and lower the cost basis and try to get it called away, which I'll try to do that and flip it for maybe, I don't know, maybe $5 a share, $10 a share. Okay. Q's gap fill. Okay. Pushing slightly higher in the SPY. All right. So this trade's done. This trade's done. Those were profit. Now I'm putting in a new one. Then we'll get some other currencies. So 365 by 360 ratio spread for the 10/18 expiration. So 365 starts me right around there. Okay, let's get some other currencies. So dollar index, we can start there. Okay, so I was telling my traders this morning, I mean, the dollar's dropping a little bit. I'm still not convinced this dollar index is doing much of anything outside of maybe pricing in a rate cut cycle. And to do that, I'd like to see this. If the dollar breaks this low that we had from last week, Monday, okay, if the dollar breaks that low, then we're in some open space to retest 101 and possibly 100. And if it gets really ridiculous where the dollar just gets crushed, then we have a broadening pattern that potentially brings the dollar down into this 18127 extension, which is around 98 to 97. Currency wise, if you're a Forex trader and we break through 101 and 100, what I'd like to see is well, let me zoom in. I don't want to force this trade, but this is what I looked at initially when we had this recovery. If you were going to sell the right-hand side of the trend line, stop loss above this high, you're already starting to get the price looking favorable to the downside. I'm not quite there to think that this is a guaranteed sell-off on the dollar. And the reason I say that is because the dollar's been choppy for several months. August is still a really difficult transition month. And if we see the dollar, for example, come down to the same low again, find this bottom, and then rip back up, it's not ready to make that open break yet. So to me, as a seller of the dollar, we've got to get a nice clean break below 102. And then I'm looking to be more bearish on the dollar. If I sell it at 102, got a target at 101, target at 100, cancel, replace, move your stop loss. I think that's a good basket trade on the dollar. But if we come back into the same low, okay, the same low and bounce, well, there's a tight stop loss for a buyer, and we come back into the same pocket at 104, and this thing is still in this wedge that is not giving us any clear direction. Okay, so I'm not convinced that we have a dollar direction yet, but I will be watching that 102 handle, and I will look to see what price action does. Okay, I think I'm hoping that we get a direction on the dollar. Those last 3, 4, 5 months have been agonizing to see any type of real direction on the dollar, and I hate every one of those currency pairs. But if we get a nice clean break below 102 and we're looking to go down, okay, cool, because we have a high, low, lower high to lower low and measure symmetry, get it out here into open space. That'd be a great sell-off trade in the dollar, right? The problem is risk-off trading. If we see any type of risk-off trading, the dollar gets stronger. Same thing with the yen, same thing with the Swiss, and this dollar goes nowhere. If we have real risk-off trading, then we've got bigger problems ahead where everything looks crappy and the dollar gets stronger. So does the yen, so does the Swiss, and we have a huge risk-off event. Is that really what's lining up here? Not necessarily. You know, if the Fed's still going to get lucky and kind of thread the needle on the soft landing scenario, then I could see the dollar getting weaker, more than likely. But to me, I've got to get a nice clean break below 102. So DXY, one chart, pretty much covers all of my pairs except for the dollar yen. The dollar yen, it's its own thing. All the yen crosses are moving pretty similar. So follow your yen basket. what's the yen doing? Well, they all dropped a ton. They're all pulling back towards that 38%. If they get above the 38%, they're probably going to the 50%. There's your equilibrium. And then short term, looking for the yen crosses to make decisions. Okay. The trades that I'm liking right now, I'm long on the Aussie CAD. There's a nice little channel here. Low, low, low. Long on the Aussie CAD to get to channel highs or try to get back to these same highs around 95. So Aussie CAD is one of my favorite trades that has nothing to do with the dollar, nothing to do with the yen, just two nice commodity pairs trying to kind of duke it out with good technicals. New Zealand CAD, same thing. Very similar structure, looking for this to push up. We have RBNZ rate decision tonight. I'd like to see if the New Zealand CAD can get up towards the 8,800. Swiss pairs, I'm still long on the Swiss. So Aussie Swiss is bullish for me. And I've been holding since equal lows here around 56, as well as tons of other positions, but I'm in. Let's see what we're doing today. I've got Owanda accounts running long on Aussie Swiss. I've got an IG account running or Tasty FX running. Let me see where I'm at. Yesterday I was up like $520. I'll see if that's up higher today or flat. I went from like $500 profit to like $250. I'm gonna see if I'm back up in profit today at 500 plus. What's up with NQ? I don't know. We just spent the first 45 minutes talking about all the indexes. So, I mean, this is what I'm watching right now. It's just going higher. I mean, we're pulling right back into that equilibrium zone. So the market likes what we saw today in the news. That's really it. Right? Yet today's news, market liked that we had lower PPI, which means that businesses making things or having things more expensive to them, passing on that to the consumer. It's less of that cost getting passed on because it's lower prices coming into businesses. And then tomorrow's CPI is just going to be our year-over-year. Of course, we have the core CPI, which is minus food and energy, and oil's up like 11% in the last couple of weeks, but that's probably not a factor. We'll see what the CPI year-over-year prints. All right, where's my IG at? There it is. Trade. So I'm back up $380 right now. I'm still letting them run. So take profit on the Aussie Swiss. I'm going to take some profit up here towards these highs. So my position's right there. I'm going to try to take profit back at the same high and then rebuild a position for a bigger swing. Okay. Or, rebuild all the way back down and trade a range, back up. Maybe this is a range trade, but keeping it long for right now. Okay. So the Swiss pairs, Aussie Swiss, I'm looking for an opportunity if we go from a flash crash low up, a little bit of a pullback here would be nice just to see this thing want to rebuild and then make its way up into the 6,000 highs or 6,100 highs. Okay. CAD Swiss, same thing. CAD Swiss off of flash crash lows. This one I did get filled a couple of times. This one was a slightly bigger drawdown because I was leveled in here. And on a trend line break, I was leveled in here with some stacked orders. I was leveled in here with a buy. And then when this thing dropped, I had a fill pending at 6,000 that didn't get filled. So I did get a trade around 6,150 just to add into it. But now I'm just waiting for either, somewhat of aggressive trend line or just wait and see if this is flash crash low. We come up, pull back a little bit, and then get another nudge to the upside. I'm just looking to see if this CAD Swiss will replace these highs or try to retest these highs. So I'm looking long after flash crash. If you've never experienced a flash crash in Forex, typically that is a pretty solid bottom or top to trade. So I'm looking at these as an opportunity to trade the lows, and it's possible that we can, have a higher low. It's possible we can come back and retest the same low. It's possible we can go a little bit lower with divergence, but I'm still looking to build my positions off those lows. Okay, Euro Swiss, same thing. This one to me is a double bottom. So we bounced right off this low. I got filled at that bottom on Euro Swiss. I'm trying to get back to the highs around 99. If this is truly a double bottom, then you measure the move and you project that move up, and this is a move towards 105. That would be an excellent take profit if we're going to hold this level. Now, I'm not going to hold out for dear life to 105. If we get back to 99, I'm taking profit. That's still a pretty good trade. Pound Swiss, I'm in, but I'm holding that one's it's 5% margin, so I'm not doing much of that one. Swiss yen, I'm not trading outside of a swing trade I posted this morning in my trading room. I'm doing a swing trade around this 55% pullback zone, stop loss above the high, and going after a swing to the downside. It's like a 2.5 to 1. If I go to the New Zealand Swiss, This one, looking at the same thing, we got the Kiwi rate decision tonight. If it just keeps ripping higher, awesome. I'd love to see it come into that zone. Try to get back to the same high. That's my profit target, 56. I'd like to see this thing get back to 6,000. But to get there, if we go up and then pull back again, I'll kind of reload and then get that symmetry trade towards 6,000. So I'm still, I mean, look, this Swiss franc stuff for me might take another 3 to 6 months to have my profits materialize. But I'm willing to hold on to them, get some positive swap, generate some nice gains overall, and go from there. Okay. All right. I covered most. I think somebody asking euro dollar. Look, if I talked about dollar index, that's essentially your euro dollar inverse. So I don't have any good trade on the euro dollar. Even if the euro dollar were to break up here, if it breaks up here, I don't really see that as a breakout trade unless the dollar, if the DXY is less than 102, okay, then sure, the euro dollar looks pretty good for a buy trade. Follow along with what you see. But I need to see that DXY supporting the same evidence. Okay, all right, we're running low on time here for me. Silver and gold, I still like both of them bullish. I'm gold is trying to retest highs. Be careful on this one. Just don't get a bull trap. I could see gold, poking highs, testing, and then pulling right back into these levels. I'd still love a chance to buy gold around 2270. But if it doesn't, if it breaks out here, which would be good for all the gold bulls, if it breaks out here and then pauses and we go higher, awesome. Let's just keep the gold bull train running. But watch it closely. Just don't get suckered into a bull trap. Silver, I'd like to see, past resistance here hold. And if we can just break a trend line, start working our way back up to 30 plus, I'm looking for a longer silver. I like silver a lot. I'm trying to get bullish. I am bullish already. SLV, silver futures, but trying to hold on to this one towards like $35 or higher. Okay, so there you go. Corn short, man. It's up to you, man. Where's my corn futures at? It's Z something. Is it ZC? Yep. So corn futures, I mean, you're going to short this. I'm just going to wait for long. To me, chart alarm for me is down here. If I'm going to go anything on corn, it's like nothing. Short, sure, but you're playing with like borrowed direction. I think if anything, this stabilizes. Maybe you come down to 320. Come down to 320. I'm way more like longer term, at least like stabilizing in corn. So I don't know. I like corn long if it gets low enough. I'm just not going to do anything on it right now. Japanese yen, we just did it. We did the whole basket. We did all the Swiss. We did all the Japanese yen. We did all the dollar. I think my time is up. I think. So if you want some more, then check me out on YouTube. Join my Discord channel, and come back tomorrow when I join A1 Trading. Okay. So if James isn't popping on to kick me off, I think I'll just kick myself off. We're good. So all right. Everybody, have a good rest of the day. We'll see you soon. Thanks. Bye.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good day, traders. How are each and every single one of you? You good? Let me ask like this question. How many of you are like still long on the NASDAQ? How many people are looking for some shorts on the NASDAQ? Let me know. Because ultimately that is the only pair which I'm finding myself trading. To those who knows me, you would know that I'm a scalper, right? So I'm just looking for short-term trades when it comes down to this beautiful pair called the NASDAQ. How many of you are still long? How many of you are still short? So I'm basically going to start off from our DXY, right? I agree with Chris' analogy or his analysis, which he have found himself making, right? But I will also just find myself sharing my thought processes when it comes down to the DXY, as well as, you know what, the NASDAQ. And then if you guys have any questions whatsoever, you know what, feel free to ask. Okay. So starting off from the DXY, if I maybe can go on the monthly time frame, right, we can clearly see that we don't really have much price action happening over here, right? I will still consider us being quite range bound when it comes down to you know what, the DXY on our monthly time frame, right? But like I might mention, I'm a scalper. I want to see what can potentially happen in between right over here, right? So if we are going to look at market structure currently when it comes down to the DXY, we can clearly see that we find ourselves creating some beautiful higher highs right over there, right? But recently we find ourselves creating a lower high right over there, and even looking at the lows, we can see that we have this beautiful low, higher low, lower low right over there as well, right? So how I'm basically just looking at the market is that, you know what, we need to find ourselves moving with impulses and corrections, right? Impulse correction, impulse correction, impulse correction, impulse correction, etc., right? The market just don't find itself moving with just one move to the upside or just simply one move back towards the downside, right? So with us basically creating this lower low, I am expecting some sort of an actual pushback towards the upside when it comes down to this beautiful pair called the DXY. And if we are going to look at the range which we have found ourselves creating, if I can just get out my Fibonacci from point A to point B like that, you know what, I just want to see the DXY at least come back into a premium area, which is basically lining up right over there, right? We can also see that we did find ourselves creating a beautiful order block with a move back towards the downside as well, right? B, bull, B, right over there, right? So find yourself boxing that out just like that, right? As this is basically serving as a point of interest to where we can potentially find ourselves heading back into, right? And also potentially find ourselves having some sort of an actual rejection for a potential shift back towards the downside. Okay, so if I can maybe just zoom price out just a little bit, right? And maybe go on the daily time frame, right? On the daily time frame, we can see more structure, right? And we can see that price did find itself tapping within a strong area of support, right? As we are currently still tapping within this area. So I would actually like to see some sort of a bounce from this area. Some sort of a bounce from this area, right? Because if we can simply see the DXY changing market structure on our lower time frame, right, this will be fueling the NASDAQ to find itself having that shift back towards the downside, right? So with the NASDAQ shifting towards the upside, we can see that it is going inverse correlated with what is happening on the DXY, right? We can see that we are having a beautiful shift back towards the downside, and that is fueling the NASDAQ having that shift back towards the upside as well, right? So scaling to the H4 time frame on the DXY, right? If I can maybe just look at what is finding itself happening within the strong area of support, right? Once again, just like I mentioned on the higher time frame, we can see that we did find ourselves creating a order block over here as well, right? So all I'm just simply going to find myself doing is box out this area just like that, right? So if we can basically see price come all the way back down, back into this area, have some sort of a rejection and have that shift back towards the upside, right? That would be clean, right? That would be clean, because I am simply looking for some shorts when it comes down to the NASDAQ, okay? I'm looking for some shorts when it comes down to the NASDAQ, so I will tap back into it once we get to the charts or once we get to the NASDAQ, right? So if we can see price have that actual pushback towards the upside, having a closure above this high, which we have found ourselves creating, you know what, that will basically be, or that will give me the confidence in saying that, you know what, we are changing market structure from this beautiful bear market back into a bull market, so we can see price have some sort of an actual shift back towards the upside, right? So that right there is my analysis when it comes down to the DXY. Does anyone have any questions when it comes down to the DXY? Why? Does anyone have any questions whatsoever before I'm going to find myself scaling over to the NASDAQ and basically indicate why I would be looking for some shorts or potential shorts? Does anyone have any questions when it comes down to the DXY? And obviously, if we are going to find ourselves having a closure below, right, there is a high possibility for us then, looking to take out these lows, which we have found ourselves creating right over there as well. That's just something that you need to take into consideration. But most importantly, price is not just going to find itself having one huge shift back towards the downside, right? We need to find ourselves creating some sort of a correction as well. All right. So yeah, that right there is my outlook when it comes down to the DXY, right? So let's scale over to the NASDAQ and see what is happening on the NASDAQ, right? So looking at the monthly time frame, we can clearly see in overall, we are quite overly extended towards the upside, with us basically creating some beautiful, beautiful high highs, right? We can see that we had a beautiful high to us then creating a beautiful higher high right over there. Now, looking at this candle, which we are currently finding ourselves forming, right, we still do have 17 days and 6 hours for this candle to close. There's still a lot that can find itself happening within this time period, right? But if we can find ourselves having some sort of a closure around about where we are currently with price, you know what, I am looking on taking price quite short. Right, I'm looking on taking price quite short, and that will simply mean that there would be a high possibility for us to at least fill up this week, which we have found ourselves creating right over there, right? But keep in mind that we still do have 17 days and 6 hours for this candle to close, right? And just to look at what we find ourselves doing over the course of this month, we already had a 2,300 pip move towards the downside, right? As well as having a whole 1,600 pip towards the upside, right? So with that being said, we do have a whole lot of volatility inside the market. And with us basically having volatility, a lot can find itself happening within 16 days. All right. So if I can maybe go to my 2-week time frame, right now, the exact same thing as what I made mention earlier on the actual monthly time frame, right? If we are going to look at this candle right over here, I actually want to see the NASDAQ fill up this candle right over there, right? I actually want to see the NASDAQ fill up this week, right? 1,600 pip move back towards the downside. Now, how I'm basically looking at price is like the following, right? I do look at things such as, some fee value gaps. And as we can see with this momentum, we find ourselves having towards the upside right over there. We can clearly see that, we did find ourselves creating a fee value gap right over there, right over there. Okay, so if I'm basically going to extend price a little bit like that, this is coming through as an inversion fair value gap in my eyes, right? So for me, Diego, I would actually like to see us hit all the way back up, back into this area, and potentially have that actual shift back towards the downside. Okay, and have that potential shift back towards the downside from this area. So this is basically serving as a point of interest for me to be looking for some beautiful, beautiful short opportunities, right? So if I can maybe go to my weekly time frame, right? On the weekly time frame, if I can maybe just zoom price in just a little bit, looking from previous price action, right? We can see that price did find itself creating a beautiful swing high right over there. We can see that price created a swing high right over there as well, right? And price simply found itself slamming back towards the downside, right? And here we can clearly see that price did find itself creating a swing low over there as well, right? So with us basically taking out the swing low, this whole region is serving as an area of supply for me, right? So with us basically having a closure below our area of supply, right? Maybe if I can just find myself doing that for each and every single one of you. So with us basically having that closure below the area of supply, all I'm waiting for all I'm waiting for is a retest back into this region. And then we can see that we had a retest already and had a beautiful shift back towards the downside from that area onwards, right? But, big but, right? But, so with me basically pointing out that area of supply, right? An area of supply in my eyes is basically changing market structure from bullish to bearish. Right now, even though we find ourselves having the retest back into the area already, I'm gonna simply find myself grabbing my FIB from that high to the low, just like that, right? From the high to the low. Okay, so we can clearly see that we had a shift back towards the downside, and currently I'm looking at this as my potential correction, right? A potential correction. So impulse, correction, for the next potential impulsive move back towards the downside, right? That is basically what I have my eye out on when it comes down to the NASDAQ on the weekly time frame. Okay, on the weekly time frame. And we can also find ourselves grabbing out a beautiful trend line as well, right, from these lows. And we can see that we did have a beautiful first, second, and a third touch right over there. Now, you may be like, D, are we going to find ourselves having a closure below this actual trend line? I am not sure about that, right? I will just find myself monitoring price and see if we can find ourselves having a closure below this trend line, right? And if I would want to see a closure below this trend line, it has to be on the weekly time frame, right? I have to see a weekly closure below this trend line to be like, you know what, we can potentially see price have a further continuation move back towards the downside, potentially back into, you know what, this region right over here, right? Which is basically coming through as a monthly correction, right? Or just simply a monthly area of support, which is lining up within that area. Okay. So yeah, you know, I would like to see some shorts finding itself still, you know what, opening up on this beautiful pair called the NASDAQ. I can already hear some people almost probably like, no, no, you know, we're just gonna find ourselves having a shift to the upside. But you know what, it's perfectly fine. This is just simply what I have my eye out on. Okay, this is just what I have my eye out on. All right, so looking at what we currently do have with PA, right? And the reasoning to why I would like to see us actually have some sort of a pushback towards the downside is simply because of these lows right over here, right? So we find ourselves creating some relatively equal lows right over there. And with us basically creating some relatively equal lows, you know what, to me, we do have liquidity resting below this area right over there, right? So with us basically having liquidity resting below, I want to see price at least take out this area right over here. All right. So yeah, that would basically be the main reasoning to why I would like to see us come all the way back down, you know what, back into these lows which we have found ourselves creating right there. And with current PA, right, with current price, we can see that we had a beautiful shift to the upside throughout last week, right, and today as well. Now, if I can just simply look at market structure once again, because ultimately all I'm doing is following market structure. All right, so we can see that we had that higher high right over there, and then we find ourselves creating a swing high right over there. So I will consider that as being my lower high, right? And then this as my lower high as well. So clearly we are bearish in market structure when it comes down to this beautiful pair called the NASDAQ, right? And if I can get my FIB out from this high, well, from that high to the low, which we find ourselves creating right over there, we can clearly see that we are finding ourselves tapping within a premium area, right? So with us basically tapping within a premium area, this is simply me preparing for some beautiful shorts to find itself opening up, right? This is me simply preparing for some beautiful shorts to find itself opening up. And my first point of interest is basically from this region right over here, right? So this was a previous order block which we have found ourselves creating, right? And this basically came through 6 June 2024, right? So if we can basically see price come all the way back up, back into this area over here, you know what? I will just simply wait for price to have some sort of a change in market structure on my actual lower time frame to be looking for some beautiful, beautiful short opportunities, right? Scaling to the H4 time frame. Let's see what's happening over here. Scaling to the H4 time frame. You know what? Over here, what I have boxed out is simply this huge fee value gap we find ourselves creating right over there, right? And this fee value gap will be serving as my quote unquote area of resistance, right? My area of resistance. So if we can see price have some sort of a push back into this area, you know what, when I refer to a lower time frame, I'm basically referring to my 1 hourly time frame and my 15-minute time frame, right? If I can see a clear market structure shift, you know what, then I will participate with some beautiful, beautiful shorts. All right. And looking at overall PA from what we have found ourselves creating right over there, we can clearly see that, you know what, we find ourselves having a beautiful swing low right over there, swing low right over there as well. So if I maybe can just trace up the charts like that, this will basically be my sell side liquidity, which we find ourselves forming, right? And looking at this push towards the upside, which we have found ourselves forming right over there, this will basically be my buy side liquidity. Okay, my buy side liquidity. So the moment we basically had a closure above this candle right over there, this is when we changed market structure, right? This is when we changed market structure from this bear market back into a bull market. Okay, so with us being currently bullish in structure, all I will just simply find myself doing is just holding or just keeping my foot on my charts, right? So wherever we're going to see price have some sort of an actual rejection, right, this is basically where I will monitor price and wanting to see price have some sort of an actual shift back to the downside, right? So if we can have that further push back up, I'll just simply find myself monitoring price as it is, like wherever price will find itself rejecting from, right? So an area or a point of interest to where I would like to see this thing find itself having a shift back towards the downside back into will then just simply be back into a discounted area, right? And the discounted area is finding itself coming through, you know what, right between our actual 100% and our 50% as we have it right over here, right? So currently we can still see that we are having that shift towards the upside, right? And like I made mention on the DXY, I would like to see the DXY first having some sort of an actual rejection towards the upside, right? Before I will find myself participating with some shorts on this beautiful pair called the NASDAQ. Does anyone have any questions when it comes down to my analysis or my breakdown on this beautiful pair called the NASDAQ? Does anyone have any questions whatsoever? Does anyone have any questions whatsoever? Or you all have a clear understanding? You all good? You all good? Looks like we do have a little bit of a delayed. Looks like we have a little bit of a delayed. Right. So yeah, you know, that right there is my outlook when it comes down to this beautiful pair called the NASDAQ. And like I made mention, you know what, the NASDAQ is the only pair which I'm finding myself trading, right? So I'll be patient and I will wait for price to present my actual shorts. Okay, and that right there is literally it from me. Thank you to all the guests who found themselves sharing their valuable knowledge, right? And thank you to the chat as well. You know what? I hope you guys have found yourself taking away something from each and every single one of us. And till next time, I'm gonna see y'all. Similar.
Thanks for tuning in to
Means
today's
nothing.
A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.